Mr. Girish Tanti. He's the co-founder and vice chairman for Suzlon Energy, one of the largest wind players in the country. We have Mr. Molly Banerjee, President Asian and South Asia for Linde. And we have Mr. Prasad Chapekar, the director at MN Ministry of New and Renewable Energy, handling the green hydrogen mission. Sir, I'll start with you. So you being almost like a stalwart in the wind industry, how do you look at the 500 gigawatt targets that the country has, and where do you think we'll head in the next 3 to 5 years? We have had a very good year. So do you think it's going to continue or?
Yeah. Thank you. Thank you for having me. I think if you look at our goal right now of 500 gigawatts, within that, where solar we have already done about 135, wind about around 54, and the projects that have been either announced under implementation or advanced stage of bidding, I think largely we have a visibility already today of about 400 gigawatts on that. And we are hopeful that in the coming year, the balance visibility will also come. So I think fundamentally few things have happened, and that's why I'm kind of very confident that we will hit our 500 gigawatts target. Number one, I think for the first time we are seeing the challenge of intermittency of renewables being addressed at a price point that with today wind, solar and battery storage, even if you see the last tenders which have come out, they are kind of able to produce at a price point significantly below any other source of energy that India can produce today. And moreover, can do it with green and can do it with no risk of geopolitics. So I think from that point of view, from an energy security point of view, from the pure affordability point of view, price point of view, and the other challenge that we are seeing is that we are entering into a phase of extremely energy hungry world.
Yeah.
If you see due to electrification, EV adoption, as well as AI, and also green hydrogen that is expected to take off in the coming years, all of this is going to need a huge amount of electricity. And with the combination of competitiveness of wind solar storage, the modularity of its nature, the speed at which it can be done, the kind of distributed generation possibilities that it has, it solves so many of our challenges that otherwise a country with such energy hungry demand we have. It just fits well in both. So actually there is a convergence of energy transition and energy security being addressed by renewables energy today. So with that, I'm pretty confident that we will hit our goals. And as time passes, with the kind of innovation work that's happening in RE sector and storage technology, the targets going ahead will only go up.
Got it, Mr. Nand. Thank you. So, Mr. Chapekar, for a question for you. As you're looking at the and we talked about Mr. Tanti talking about 500 gigawatt actually being very realistic. Sir, how does the ministry look at the next wave of growth? So this is one. We've talked about solar and wind, and we talked about hybrids, and a certain megawatt was what we were running after now. Now, what do you think is the next wave of growth that the ministry is looking at?
So, next wave of growth in the RE obviously will continue with the REIA bids. But I'll tell you that the 500 gigawatt target is not just REIA targets. It's combination of CNI, state bids, REIA bids, plus decentralized solar, decentralized RE also. So you've seen a lot of focus on the solar rooftop scheme. We are also getting a lot of traction from the states in the solar feeders, like making all the feeders solarized.
Yeah.
Multiple gigawatts of tenders have been issued for these feeder plants in this year.
Yes.
So you also see those being operationalized in the next 1 or 2 years. So it's not just large scale REIA bids which will drive that. This is one part. So it is REIA bids plus state bids plus the decentralized solar plus hydrogen. So I think all four will probably drive the coming wave. We have already seen around 3-4 big offtakes for exports announced for hydrogen, and also the upcoming green ammonia tenders. those will add another 500 or 700 megawatts of drawal as well as injection. So these four parameters will drive the coming few years at least in RE.
Got it. Thank you. And Mr. Banerjee, maybe if I move on and taking cues from Sir, when you're looking at green hydrogen space and the green ammonia space, we've seen a lot of tenders in the market and seen certain prices being discovered. We've seen certain export opportunities being tapped. How do you think, as a player and one of the major players in this ecosystem, how do you think this space evolving over the next? How is it viable as we stand today, and how do you see it over the next 3 to 5 years?
So maybe let me.
I think you'll need to.
Mic.
Sir, I think you need to take the mic up. Yeah.
Sorry, is that audible? I hope that's audible. So, okay, I think maybe I'll just pick up on two very important points that Girish made. One was that energy security and transition beginning to converge. I think a very important point. They are not competing priorities anymore. Energy security is not just about importing some cheap hydrocarbon and finding a sustained source of cheap hydrocarbon. And energy transition is not just about trying to move into clean molecules. I think it's an imperative overall. So we see that convergence happening. The second bit is that renewable energy is already becoming commercially viable. It is actually already available as a cheap form of energy. But the key issue is that, number one, there are hard to abate industrial sectors which have very energy intensive reaction chemistries. So they require the molecules. So whether you are talking of primary steel making, fertilizers, refining, you can't electrify those processes. Absolutely. You need the clean molecules in those processes. So hydrogen is important. Secondly, it's also about the storage. You can have battery solutions. They are now beginning to provide storage solutions, but only up to a certain point. Beyond a certain scale, you really need hydrogen to provide that storage. So this challenge around intermittency of renewable supply is something in the long run, you will require hydrogen to meet that. Absolutely. So that's what's going to drive the requirement of hydrogen, the demand of hydrogen. And that demand is something that's going to create the economics of hydrogen because the scale will go up. And that's something we are seeing. The current bids that we see, I think they are bids more in anticipation of what might happen. I don't think they really reflect the current cost points, but they are more a bit aspirational, thinking in terms of what might happen in the future. But definitely, I do believe that that's where we are getting.
Got it. Thank you. And just talking about intermittency and Girish, we've talked about obviously solar and wind combining together and batteries and all of these stuff coming together. Do you think that the intermittency issue has fully been solved in the country, or you think there is a lot more that is required that the country still needs to do? And I'm talking it more from a wind side of it.
Yeah, so I think if we see today on the parameters that you would typically procure conventional energy, on similar parameters, if you were to buy renewable energy, today you are able to get a solution with wind, solar, and storage at a price point which will compete. So, all things being equal, it can compete. But as we know, for different sectors, there are kind of different preferences, different norms, different subsidies. So the true cost of energy is actually not very transparent from that point of view. So I think, and we must also remember that today we don't factor in the cost of carbon. So that's the other element, but we can leave that for some other day. But I think it's a critical thing. And with our cities getting so polluted, this is something which is also, we need to be mindful that we make the energy transition in the rightful way.
Got it. No, and just a follow-on question to that as well. We've talked about intermittency, but when we talk about, let's say, just the wind side of the things, we've seen a fundamental shift in platforms. We've seen a lot of new developments happening. Do you think that this is going to, we are already at 5 megawatt platforms and we are going beyond, the world is at, the offshore winds are much higher. Do you think offshore segment is going to pick up in the country? How do you look at the platform and the technology side of it?
Yeah, so I think on the technology side, since India started this journey almost 3 decades back, I think for the past 2 decades, the product technology solutions which India produces can compete anybody in the world. Almost just like Suzlon alone, we have exported 6 gigawatts of wind technologies to 17 countries, and and these are all, large portion of it is all in the northern hemisphere. So it's gone to most of the developed world, be it the US, be it Europe, be it Australia. So we have had very cost competitive, highly reliable, performing products that we have developed. So I think from a technology point of view, and the early research development work that has happened from day one is helping us to make sure that, because that has been at the core of what we do, has been research and development. Just to give you an example, when we started the journey early on, and now if you compare, the cost of generation has reduced by 3 times.
Yes.
The PLFs have doubled. And effectively, if we see the wind potential of our country was about 300 gigawatts at then. Today it is 1.1 terawatt. It's not that the winds have improved, it's the technology which has improved.
Yes.
So 3x wind potential. Likewise, in 10 years, this 1.1 will further increase. So sites where we were not able to extract energy before, we are able to do that.
Got it.
And with today's 54 gigawatts, we have just consumed about 4% of the land mass that is capable of generating electricity from wind. So there is still a huge potential on land.
Yeah.
Coming to offshore wind, I think from a product and capability point of view, we do have that capability. Historically, we have managed the then largest offshore wind energy company out of Germany. So we understand the technology and capability exists. I think what's important is timing it correctly for India. Most of the global countries have gone offshore, largely for 2-3 reasons. One is that the winds are very high in the sea. North Sea especially has very good winds. Other is that these are landlocked countries and they don't have enough space for themselves. Effectively, what we have seen is that from when you go onshore to offshore, the cost is almost 2.5 to 3x. So unless you have a generation which is higher than that, it doesn't make sense.
Got it.
For India, we are at a stage where we still have just used 4% of land. Unfortunately, our Indian Ocean, Arabian Sea is not having that huge. There are pockets where we may be able to do some few projects, but the scale seems a little distant from now. So I think it's a journey. From a capability product-wise, I think we are there. But from a timing, I think we are still a few years away. Although government is wanting to do some demo projects and work on that. So we are working very closely to make sure that India is well positioned also in the offshore market.
Got it. And then there have also been challenges related to the tariffs and the offtake related to the offshore wind.
So
that is also.
That will, of course, see, the viability is the first thing.
Yes.
So today, if you can get a wind power project generation of a large scale of a gigawatt or multiple gigawatts at under 3.5 rupees, would you want to go offshore and do it at 8-9 rupees?
Absolutely.
So that's the question. Who is going to subsidize that? And
Absolutely.
does it make sense? So I think that's where the question is right now.
Okay.
So maybe we'll do some demo projects just to demonstrate the capability.
Yes.
But I think on a large scale, we are still a little away from that.
Yeah. And just on Mr. Chapekar, if I ask you about renewables from a policy side of it, we have seen the distributed generation being a decent success. PM Kusum scheme has also picked up. Suryaghar scheme is picking up as we speak. Is the ministry thinking of tweaking the scheme for even acceleration beyond? I'm saying, is the ministry even looking at tweaking the scheme of Kusum going forward? Are there any new schemes that you can talk about, both on the hydrogen as well as in the renewable space?
So, PM Kusum definitely will be continued. I don't know exactly what form, that will depend upon the approvals we receive.
Sure.
But PM Kusum will definitely, because we are getting more traction from the state governments. So now they are realizing that they actually reduce the subsidy burden if they use PM Kusum.
Yes.
So they'll use traction. So PM Kusum will probably continue. In what specific form, we'll have to wait for the approvals.
Got it.
To announce that. Hydrogen scheme is already approved till the end of this decade.
Yes.
So there is no more tweaking in the sense that we may do some adjustments to improve it a bit. Like for example, for the ammonia tenders, we will create a PSM,
Yes.
payment security. So such tweaks will happen.
Got it.
But we don't have any large scale tweaks to the mission. It is largely going to continue as was approved. You will see more schemes out within the framework, existing framework.
Got it. And we also heard about the methanol scheme coming up.
Yeah. So we're trying to, ultimately everywhere the challenge is offtake. So if we find a port in India, either Tuticorin or Kandla or Paradeep, who's willing to take some risk in that they are willing to sign a binding offtake, take or pay sort of offtake for 10 years plus, then that scheme will probably take off much better. We are in talks with ports, and they are hopeful, considering because they deal with ships on a daily basis, these international huge carrier ships. So they are hopeful, and once they are reasonably comfortable with their finances, as how much they can take a risk, then we'll announce the quantum. But we are, as a ministry, we are open to any derivative, methanol, ammonia. Although we do not see any more ammonia tenders till we have the existing tenders finalized, signed, and executed. Then we'll see more tenders in the future. If once these go through, we don't want to announce a lot of tenders and again get stuck with, PPAs like we are stuck with now. Yes. So we want the existing tenders to get concluded, agreement signed, the plants actually commencing construction or the FIDs. Then we will look at the next tenders.
Got it. Thank you. And Mr. Banerjee, just a question related to what Mr. Chapekar said. How do we make hydrogen viable in the country? You have to just go deeper into it. Is it just the combination of renewables, or is it what are the levers that you see in making it, let's say, a $3.5, $4 number that even beyond that we see today to a less than $2?
So, okay, I think there are 3 or 4 levers. I think the first and foremost, of course, is the renewable itself, right? That's one of the main pillars, because almost 2/3 of the green hydrogen cost is actually coming from the renewables. So that's, and in my mind, that renewable cost is already at a good point. And I think hopefully it becomes better and better. Yeah. There are challenges like, intermittency. We talked about that. I see that more as a design challenge than a roadblock. It's not really a roadblock. I think it can be overcome. So renewable is getting there. The next bit is making sure that we have the right infrastructure to handle it. So having common, shared resources, be it pipelines, open access systems where this hydrogen can be put in. That's very important, because unless you aggregate and build scale to the infrastructure, you won't get the economy. So that's the other very important thing that has to happen. The third bit is, how do you make sure that you take away a bit of the noise around financing such projects, right? So what you really need is a certainty of the demand, long-term PPAs, people who, demands that will stay there. Because what you need to ensure is there's a bit of, what I would say, frictionless financing, right? Otherwise, that noise just doesn't go away. So in my mind, that's very important as well. And last and not the least, in my mind, the secret sauce really is to find out how you economically also put to use the co-produced oxygen that comes from the electrolysis process. Because that's very important as well. Yeah. If you're going to burden all the cost on the hydrogen and the oxygen has no value, then that's also, you have to think about that. So if you can find the right usage points where you can also put the oxygen to good economical use, I think that provides a lot more of economics to that production.
And Mr. Tanti, just a follow-on question to that. And I'm moving on the manufacturing side of things now. You're looking at, obviously, manufacturing getting a big push in the country. As Suzlon, how are you looking at that space? I'm sure you are obviously one of the largest players in the wind manufacturing side. Are you looking at any other associated energy transition areas as well?
So there, I think, we've just defined our Suzlon 2.0 strategy. And the key shift that we are looking at is to move from a single source to a multi-source, full stack energy solutions company. And primarily what we have seen is that with the viability and, the demand that we are seeing on FDRE in the country, customers are, the complex piece of what we do is the wind part. And solar and BESS is a bit easier compared to wind. So customers are looking at that, could you guys kind of give us a full integrated solution? And I think with that, and since we also do the project development piece, adding solar and a BESS to that with the complex piece of wind is reasonably easy to do. So we are kind of moving into that phase where over the coming years we'll become a full stack RE integrated solutions enterprise. So customers can have everything under one roof. Where we are focusing from a technology and product specialization is more on the integration part, because we believe going ahead that is going to be critical. So like we've just currently launched in the field trials a kind of integrated energy controller, which will ultimately allow customers to switch between resources depending upon the demand curve and cost optimization and the elements around that. The other piece we are focusing on is the forecasting part of it. Again, while solar is reasonably convenient to forecast, wind is the complex piece, and with the kind of large weather stations that we have installed across the country, there is a good intellect. So we are deploying AI and other activities in that to see how we can do better forecasting on those elements. So I think in combination, effectively, we are moving from a pure single source to a multi-stack. As far as the other sources are concerned, with regards to solar and battery, I think those are already available in the market. There is a good capacity also. So we will go more on a partnership approach, and where we can add significant technology value is where we will focus on. But ultimately to customer, it's like a one-stop shop, so that effectively, they don't need to worry. And since we also have a full value chain from project development to EPC to manufacturing to lifetime service, they get also the benefit of a partner who can take care of the whole value chain. So especially the industrial customers, the PSUs also now, and we are seeing the private utilities also. All of them are looking to a more integrated solution service. So we've started that discussion. And I think now people are also doing forward planning. So almost year 3, 4, 5 planning is happening, where they know that we need to decouple the development and execution. So we're working with them on building a more long-term view of how the RE assets will be built. And just to also add to what the colleagues were saying, I think many of the customers are currently also building up their RE assets, which in future they can switch over to green hydrogen support, So I think there is also that build-up which is happening ahead of the curve, because today on a standalone, they are viable solutions. And as the hydrogen side of ecosystem gets developed, off-taking and some of the elements which Sir mentioned, as they fall in place, I think that integration, they'll be on track to switch it over to use for those projects.
Got it. And a similar question to Mr. Banerjee as well. From a Linde point of view, how do you see you play? What role do you see Linde playing, especially in an Indian space? Would you want to restrict yourselves to hydrogen, ammonia, or you're looking at something broader? And even within it, what is your strategy? If you can talk about it a bit.
Sure. So, Linde's role overall is essentially to make sure that we support the hydrogen end users in terms of providing them safe, reliable, and a steady source of the hydrogen. And we have a range of technologies that we provide, be it in terms of compression of the hydrogen, delivery of the hydrogen, liquefaction of hydrogen. Hydrogen as a gas is pretty difficult to handle, right? There are safety issues with it. It's difficult to liquefy, very low boiling point. But Linde thankfully has all the technologies to deal with it. Over a period of time, we have commercialized many of these technologies all over the world. We run currently some of the largest electrolyzers. We talk of gigawatt scale electrolyzers today, but in reality, there are only a few megawatts capacity electrolyzers running anywhere in the world. And we probably operate some of the largest. We operate a 35 megawatt electrolyzer at the Niagara Falls projects in the US, where we are converting hydroelectric energy into green molecules, liquefying that. And then, we've doubled our liquefaction capacity in the US. based on that project. We run a 24 megawatt electrolyzer facility in Leuna in Germany, which supplies into a large hydrogen grid, pipeline grid infrastructure that's supplying the entire industrial cluster. So these are ways which we are using to slowly help build up the commercialization of the hydrogen. Ultimately, our role is to make sure that we help transition from renewable energy to hydrogen molecules that are dispatchable, reliable, tradable, in a form that the industry can use.
Got it. Got it. And I just want to move to Dr. Prasad as well. So we've seen the tariffs in the industry. We've seen SECI bids and your policy drives a certain results in terms of tariffs. We see solar and wind tariffs solar going down, actually wind going up, and hydrogen obviously being very, very competitive in the market. From a ministry point of view, are you comfortable with these? Do you think the entire thing about cost is we are chasing the lowest tariffs, right, in the industry, and sometimes over a medium term they might or might not be the best thing for the stability. Any views that you can talk from a ministerial lens?
So, as a ministry, obviously, when you see low tariffs, you are happy at the first, instance. But you are aware that, just quoting tariffs is one thing, and actually executing them is another thing. But I have also seen, in informal conversations that, I'm talking about hydrogen part of it, that the tariffs or the rates which they have quoted are not just for that project. They are building much bigger plants for other clients as well. So there's a bit of, I would not say cross subsidy involved, but overall the product is still profitable even at the rates which they quote us. Number one. And with the rates they quote us, their chance of getting clients abroad also goes up. So it's a tightrope walk, I would say, for them as well.
Yeah.
But as a ministry, we are happy with the hydrogen tariffs at least.
Yes.
And obviously, we'll have to wait till and for these companies, sometimes it's an issue of not just the tariff, but also an issue of prestige. That it's the first project or the first tender, and executing that project itself places them ahead of others in competition globally, just because they could execute a project, not because they made money from it directly. So there are multiple advantages of quoting low tariffs. So I would not go to so as to dismiss the tariffs out of hand that they are non-viable. They may have other benefits which we don't know of sitting here. Second is about the RE tariffs. The best, actually, now nobody, frankly speaking, now no state wants solar only. Yeah. Even for REIs, nobody wants solar tariffs or solar bids. The best tariffs are going historically low. Again, probably it may be, some may be overconfident bids, some may be, again, things which we don't know. They know something more than us, which we sitting here don't know. So I don't want to dismiss them offhand. But yes, there is a possibility some of them will fail. Just purely statistical basis, some of them may fail. But to say that all of them are over optimistic also is a wrong statement, I would say. You would see ups and downs in all bids. Even in RE tariff, so it's not like there's one hard ceiling set. The tariff is to go up and down beyond that, that small range. So this will keep on happening till either the supply chain moves here partially and then we impose some kind of duty or something like that. Tariffs will keep on going up and down depending upon who's supplying. Probably their supplier is more aggressive, in that country. So you don't know what factors are at play.
Got it.
So we just wait. That's all we can do at this point of time. Yeah. But we are happy to see tariffs go down and down.
So the same question from an industry lens. I'm sure we'll find a...
I was hoping you would ask me. No, I think, we've seen this for various sources of energy. You have that early phase where the prices are high because you don't have the scale, you don't have the certainty, visibility. Then you have that phase where all of a sudden the market opens up, there is more demand than you see the tariffs kind of sliding down. Also, then you have, with the geopolitical situation, changes in tariffs could also impact, and that you see swings in tariff here and there. So I think it's a journey from that, and we've seen over time, I think now both for wind and solar, reaching that maturity curve where you wouldn't see big swings, they are at a stage, unless they are of more environmental in nature, of something linked to geopolitics or otherwise. But otherwise, mostly we are seeing a combination. And I think with the last discovered tariff of, FDR rebate, almost comparable to the key parameters of a conventional source, has gone to as low as 4.5,
Yes.
So I think effectively now that maturity curve is come where you wouldn't see big swings, at least in wind and solar. And as the ecosystem of local, like in wind, it's less because the ecosystem largely exists in India. In solar, you're still dependent on battery, you are still dependent on imports. And so that disturbance keeps hitting us also.
Got it. And Mr. Banerjee, if you have to talk about, let's say, in the interest of time, if you just talk about one policy change that you would really want to hear about in India, what would that be? Which would make the business for all stakeholders better?
Yeah, I think I can speak from a hydrogen perspective.
Yeah.
And clearly, like I said, of the three pillars that I talked about for making hydrogen more and more economically viable, right? The renewable energy, the infrastructure, and the demand aggregation and the PPAs, right? I think it's the sustainability of the demand and the demand certainty of the demand, in my mind, which is probably the most important. And to that extent, putting out mandates for green hydrogen consumption, I think, is an important element that will drive the consumption and give an early start to the consumption at scale, which will then in turn drive the economy of the hydrogen production cost, right? So in my mind, that's probably one of the most important things. The government also needs to make sure that the PPAs, the way they are structured, they are commercially viable PPAs. Offtake agreements are commercially viable. So that's something that the government has to work towards. Infrastructure has to be made with more open access in mind.
Yeah.
I think that's what's going to really help to make the hydrogen cost really.
Got it. And just so it becomes a vicious cycle at the end of it, right? Because green ammonia and the hydrogen prices, if they are above, then let's say a gray at the moment, which they are, who pays for the premium? That's the challenge. Will it be directly from a subsidy, or is that actually because the scaling happens over time? So obviously it's a vicious cycle. Any views on this?
See, scaling and technology will take its time to catch up, right? So there is a particular point that you have to reach to make it economically viable, and it takes some time for the technology to catch up. That bridge is something that has to come from somewhere, be it through subsidies, through carbon tax mechanisms, through whatever mandates, whatever will be the process. That there has to be a policy mandate that provides that bridge till such time that the technology catches up.
Got it.
Just to add, I think we've seen historically that the changeover happens in a bigger way when you create the market.
Yes.
So I think if we can create the demand side of things, then we will need less government support for things to come up. And we've seen that in renewable energy. The moment the demand was created in a big way, the tariffs got adjusted immediately. So same will happen with hydrogen also.
Yeah. Yes. So anything on the renewable side, any one policy change that you would want?
So
just one, sir. Yeah, I'm sure you will have many.
There are quite a few, but I think I'll still stick to two, not just one. But I think just picking up from what he was mentioning, I think it's time for us to build our carbon markets. And I think Niti Aayog is working on doing that, and I think it's a good time. And also on the background of what has happened yesterday with EU, I think it's a good opportunity for us to kind of look at building that market with partnerships, and that should help us really speed up the energy transition in a bigger way. And second area, I would just say that, as a country, we have aspirations to be a global player of a large nature. And I think clean tech provides us that one opportunity where if we focus on end to end from manufacturing, R&D to supply, the whole value chain in clean tech, I think now India has the scale, the productivity, the performance, and the price points to compete in the world. And I think this is an opportunity for us to take the second, the last budget, the National Mission for Manufacturing and Exports were announced. I'm hoping that now we take it to the next level and really use, amongst other industries, clean tech as one focus area where, and the world is looking at India for a good partnership. So I think it's a good time to look at that.
Got it. Got it. And maybe the last question for Mr. Prasad. So both our panelists didn't mention, but I think one of the key enablers is also about the green taxonomy, especially on the hydrogen and the ammonia side. Some of our taxonomies don't really fully integrate with, let's say, European RFNB or regulations, etc. There's a lot of mismatches between banking allowed, not allowed, regions, etc. Some of the stuff hopefully should get cleared with what we saw yesterday and the day before. But any views on that would be very helpful. And then that's the last question that I have.
I will only say that just because you did something first doesn't mean you did it right. Okay. Europe did something first in RFP, but doesn't mean that they are doing it right. Okay, who knows? They may come down to match our standard, but that's not even the goal of any country. Any country standards, especially legal standards. I'm not talking about safety standards. Those are not specific to green or grey hydrogen. But the legal standard for certification, each country has its own carbon levels. No country is willing to agree with the other country's levels. Because they're their own domestic compulsions.
Yeah.
We are not meant for Europe has one, but we also export to Japan and Singapore. Yeah. That's the ambition, to Korea. Each of them have different standards. We aligning to any one of them doesn't make any sense because then you say that but this is not aligning with their standard.
Absolutely.
So as a country, we cannot align to every standard. Our standard is meant to ensure that you will use overwhelmingly RE in your project.
Got it.
That is a single goal which we had in mind. Absolutely. And not make it too complicated about additionality and other correlations, which their grid is problematic, so they have it. We don't have it. So why should we import their complications?
Absolutely.
So that's why we have not done it. And I would sure with time they would realize what they have done. And probably their review is scheduled in 2 years. Maybe you would see them scale back rather than we scale up.
Yes. No, I'm with you there personally. Thank you so much for your time. Thanks all. I think we are almost out of time, so I'll just conclude. I think very, very interesting conversation. We see a lot of the conversation, interestingly, are now shifting from a pure solar and a wind discussions on electrons to an integration between electrons and molecules. And that is a very significant shift. I've been coming to this IEW for many years, and we're seeing this conversation happening increasingly every year. So good to hear that. Thank you so much, gentlemen, for your time. Thank you.
Thank you.
Thank you.
Is somebody going to tell us when we are good to
We
go?
can just,
Yeah. Okay, so good afternoon, everybody. Nice to see a packed auditorium and pleasure to be here. Let me start off by doing a quick introduction of my panelists. I'll start off with Shane. Shane is the CEO of Kongsberg Digital, which is the industrial software arm of the Kongsberg Group, which is a Norwegian technology leader with over 200 years of heritage. Shane doesn't look so old, but he's a PhD in chemical engineering and has over 20 years of experience in digital and industrial information. Let me move on to Raj, Dr. Raj Gattupalli. He's the president and CEO of Honeywell UOP. He's a PhD in chemical engineering, brings in deep experience in process development and commercialization, and helps customers improve efficiency, reliability, and emissions performance. And last but not the least, I've got Mr. Amit Sharma, who's the managing director and CEO of Tata Consulting Engineers. Amit is again, a mechanical engineer with global academic exposure, brings about 30 plus years of experience across energy, infrastructure, transportation, and industrial sectors. I hope I've done justice to all of you gentlemen for your introductions, but if there is something that I've missed out, please feel free to add. Let me start off by an introduction for myself. My name is Neville Dumasia. I'm a partner with Ernst & Young in India, and I look after the industrials and energy business. Privileged to be here at the IEW forum, and it's an exciting place to be, something that I keep coming every year. And I always am impressed with the amount of ideas, the amount of thoughts, the amount of innovation that keeps coming up in all these panels and discussions, and very happy to see what's actually happening around the world. I thought I'd make a few comments before I get into the Q&A with my panelists. So let me start off. I mean, clearly this energy transition is not just going to succeed because we have intent, because we're keen to do it. It really requires a hell of a lot of capital. Capital is the place where we really start off with, because unless and until you actually invest a large amount of money in the industries which are hard to abate, it's not going to be possible for this to actually come into fruition. So it's a very, very important aspect over here. And as of the last couple of years from IEA, what we've got is $2.2 to $2.4 trillion has been invested in this clean energy. But the estimate is that you will probably need closer to 4 trillion year on year from 2030. So that's a significant amount of money. When you come closer home to India, what you see is a huge number of transactions that have happened in the recent past, about 1,400 odd. 1,400 transactions in the green energy space, investing about $33 billion of capital into the country. 70% of that has come from the private equity space, 70%. Now, unfortunately, there's a positive and there's a negative as well. When there is private equity money that comes in, typically what they look for is making sure that they're investing in reputable business houses, easy cash flows, visibility. But several of these places that we're really trying to do now are areas which are kind of uncharted, right? There'll be a huge number of new technologies that people are experimenting with, making them move from pilot to scale. So those are some of the challenges that hard to abate sectors actually come through. And I think it's important. It's an important area that we'll focus on and we'll drill upon a little bit more. In addition, this whole thing around digital and digital tools, how do you actually get a good sense? How do you get a good estimate of what's actually happening? Can you visualize a project or projects before they're actually launched to see whether there is certainty of cash flow, certainty of proof of concept, etc. And that's where I think we'll touch upon with Shane to get some more insights for us. This matters. The reason why I thought I'd start off and give you this context is matters because design choices made today can generate emissions for close to 30 or 40 years. You'll do an investment, plan comes up in 3, 4, 5 years, but the repercussions or the benefits of this will accrue to you for the next 30 or 40 odd years. Manufacturing processes and technology decides whether cleaner products can be made at scale, and digital systems decide whether improvements can actually last. So with that brief introduction and context setting, I'm going to jump into some of the questions. I've tried to divide it into 3 themes. The first theme being investment policy and incentives. Do they actually change decision making? And I'm going to start off perhaps with the furthest. Amit, may I pull you in first? So as heavy industry, Amit, moves towards complex multi-technology decarbonization pathways, how can companies ensure that large-scale capital deployment remains economically viable while delivering measurable emission reductions?
Thanks, Neville. Good afternoon, everyone. I think this is an important question. You can get a lot of money, but you're not starting on fresh slate. You have an existing asset, and you're looking at expansion. And in India particularly, when the energy mix is getting diverse, and you're also adding a lot of energy, adding a lot of production capacities, that's what India is doing, unlike the West, where the energy is stabilized a bit. And so you're doing change, but we are adding stuff both in metals and hydrocarbons and the whole general energy generation. How do you utilize this money and capital that comes in? I think that's where desire needs to really map with real IRRs. And a couple of years back when green was really strong and decarb was being initially debated, we championed the cause of circularity as a key part of the mix. And it's not that it's a low-hanging fruit, but it's something that gives you a boost to get your maths right in your investments. So circularity, which for example is aluminum recycling, steel iron recycling, is definitely one part. Second is, how do you look at brownfield and your greenfield investments? You can't, for example, steel cannot go to hydrogen DRI straight away, right? You need a mix of gas-based DRI, electric arc furnaces, while your blast furnaces continue. Then how do you make your blast furnaces relevant for the green era? Well, you do carbon capture, and then you convert that to methanol or SAF, and you try to do these adjacencies of circularity, both in terms of molecule circularity, but also more electrification, electrons into your mix, whether it's a refinery or steel. When it comes to aluminum, copper, they've already experiencing a big growth because of the whole AI and the EV story. And hence green electricity helps a lot. And last but not the least, when you look at electricity, how do you balance, convenient, intermittent, renewable grid with the base load? Because if you don't marry these two, you will not get a resilient grid for industrial use. And I think these are the equations to solve that will give you the right return of investment, with the starting case more focus on circularity before you do the big bets. That's what we've seen in the market emerging and panning out as boards approve various options. That's what I say, Neville.
Thank you, Amit. Raj, may I bring you in on the second question? It's in most of the hard-to-abate sectors, refining, fuels and chemicals, cleaner alternatives still cost more than the conventional ones. It's just a lot more expensive to do infuse clean as opposed to convention. Do you, from your vantage point of a global CEO, do you see today's government incentives enough to scale cleaner fuels, or are we still limited to small-scale trials, pilots? And maybe you could give us a view across the world, if possible, and then India.
Yeah, so a great question, Neville. I think this is important for us to tackle. So I'm going to go back a little bit on how at Honeywell UOP we did the things here. So way back when we invented our own technology to convert heifer-based feedstock to renewable fuels. In those days, renewable diesel was very famous. This is back 20 years, and nobody was trying to adopt the technology because the cost of production was higher at that time. And then if you look at in today's point of view, there are many heifer-based feedstock going to renewable diesel or SAF, sustainable aviation fuel, that have been operating. And the reason for that is because the economics are right for that particular technology. And the newer technologies that we have today, whether it's methanol to sustainable aviation fuel or carbon capture or ethanol, any other technologies that we have today are pretty new, that we have, that technology providers have launched in the last 4 or 5 years. So it takes an evolution to reduce the cost of production. So do you really need incentives to be able to start up? Absolutely. When we first started the heifer-based feedstock, we had government incentives, whether it's in the US or other parts of the world, that triggered investments. And once the triggered investments happen, the technology developments will overtake itself, and then you get to a point where it is cost of production is going to go down, and then you're going to make much more profitable. I think that's exactly where today's new technologies are right now. When you have to do a seed investment, whether it's private investors or government incentives that helps seed the investment, and once the investment happens, I think you will see a good return on investments. I'll give an example. Even as us as a technology provider, we've been looking at all the options in converting to make renewable fuels. One example that I have here is when we look at whether it's one of the biggest things that we have challenged on renewable fuels is feedstock. Heifer-based feedstocks has been very famous because, as I said, the cost of production has been low enough that people are making money from it. But then there's not enough feedstock that is available in that space. So people are moving towards other alternatives, but the economics are not really making sense unless there's an incentive that kicks in. So this is where we are trying to develop technologies. For example, a technology that we just launched recently called biocrude upgrading, where you can actually utilize for a country like India, where energy security is important and a lot of biomass that is available. How could you use that biomass to convert into renewable fuels? So we have developed a technology where biomass, abundant biomass, which is cheap, you could take that to biocrude and then upgrade the biocrude to make marine fuel or SAF to make the economics better. So it has to be a part of technology provider licensing and innovation to reduce the cost, but also to seed the investment, to kickstart the investment, we might need a little bit of government incentives at the start. So it's a combination of both. It's going to be help, but long term, no one will make an investment assuming that the incentives are going to be there forever.
Right.
And that's not the investment strategy, a good investment strategy in a view. Yeah. So it has to work on its own.
And at least in India, what we are seeing, Raj, is in the biomass space, we find that the supply chain is becoming quite a bit of a challenge.
Right.
Are you seeing that in other parts of the world as well?
Absolutely, right. So because you have to have a place where you can aggregate all of the stuff, or if you can't aggregate all of the stuff, you can have a hub and spoke model where you make the biocrude in different spots and bring the biocrude to a common spot where you upgrade it together. So you'll have to think about it that way. Otherwise, constructing a world scale facility in one area might be extremely challenging just because of the logistics of how you are to the transportation. So in this particular space, I think a hub and spoke model is something that is that might be a worth to look at.
Thank you.
Yep.
Shane, question for you. Today's investors don't just ask what a technology does, they ask whether it is going to be able to perform reliability for the next 20, 30 odd years. How are digital tools helping build this confidence amongst the owner promoters? What kind of insights do these digital tools actually provide them when they're making a capital decision, making sure that this is really something which is viable, fundable? What kind of visibility do they actually get to see?
We were briefly touching on this in the back room as we were preparing, and I think we've talked about this. There's two tracks. You have your brownfield assets, which accounts for the majority of the hard-to-abate industry today, and of course we're going to add capacity through greenfields and new projects. So you kind of have to look at this in two ways. If you look at the brownfield assets that exist today, digitalization's really efficiency 2.0. Right, it's about standardizing, about eliminating costs, taking out the emissions that we have in the existing infrastructure, and there's a certain capacity there to do that. Digitalization's really doing that. There's a lot of examples of this happening. Everything from cement factories, taking down 2 or 3% from these kilns. You see the steel manufacturing, also taking out maybe 5-6% efficiency. And efficiency is cost. It's emissions, and it's capacity throughput that we're adding there. And then if you look at carbon capture, which I'm a big believer in, we're going to have a mix of technologies, a mix of electrons and molecules. Some will be able to take completely down to electrification, green electrification, and some we're not. So we need CCS to be able to capture a lot of this and take it out. But the chemicals, the solvents that we use there to capture the CO2 and then the high steam that's required to release it, there's been fantastic headway made on taking out 20% of the energy costs. And it's almost 1-to-1 to emissions. It's about 20-ish% of emissions as well, just on that process in of itself. So again, through digitalization, and a lot of people throw around AI as a term, but it's old school machine learning and just better ways of working through digital tools. So on the brownfield, efficiency 2.0, think about that. And that can fund quite a bit of the energy transition as well. Then when you're looking at the green fields, and I say this again and again, if we're planning, building, executing, designing, engineering these assets the way we've done it for 20, 30, 40 years, we've failed. We've absolutely failed because we're not taking advantage of the digital tools that we have. That is the way of working, the future way of working, these plans for the future, etc. So we're getting in very much into the EPC stage, into the engineering stage. Make sure you're using engineering tools to design more optimally, because a lot of people think of emissions on the OPEX side, but 1 ton of steel on a subsea infrastructure, if you think CCUS, is 2 tons of CO2. So if you can optimize more at the limit using digital tools, you already have made a significant input into taking down the CO2 footprint of those assets. We're working with one particular LNG facility in Canada, and their big cost base was on the OPEX side was flying people in and out. It's a very remote area. They needed to prove that they could take down the CO2 footprint there. So they rewired the whole facility around a digital twin, a different way of working. We had to use AI inside there, you know, and this is a mixture of the generative and more machine learning, and then just basic, tools, better ways of working there. And that had to take down 10% on the CO2 footprint and 50% on the OPEX cost. So again, it goes hand in hand. But the willingness to change the mindset of how they were going to operate that plant. And, you know, the way we build these facilities is you normally take people or experts who have done this before and you go, hey, you built an LNG facility, 10 of them around the world, let's come in. It doesn't require that way of thinking. You need someone who's maybe never built an LNG facility and go, why would you do it that way? And blending these experts with kind of new ways of thinking, that is what will really, really take down. And then I know we talked about electrification. Today, these hard-to-abate industries contribute about 40% of all global emissions. Right. That's a lot. By direct electrification, you can take down 25% of those emissions. So getting that involved from day one, from a design thinking perspective, and then maybe you have to look at locations and what type of molecules you're putting behind there, that can have a significant impact. But when you start integrating like this, it becomes more complex for humans to be able to operate it. That's where digital plays its a key role.
Fantastic. And sorry, this is a question that I find hard to resist, but in all digital models and digital tools, the one thing that is a perennial problem is data. Oh, yeah. The underlying data.
Yeah, yeah.
It's almost as if you're saying, oh, tell me about it.
No, but, I say, everyone goes, hey, we'll start digital when we get our data problem sorted out. And I said, look, that's never going to happen, right? Let's be real. Let's be pragmatic about it. And we operate and maintain our assets with the level of data we have. They're not blowing up all over the world. So we have data to operate these facilities. But taking that data, we often say that's the minimum amount of data in a structure to operate these plants. And then anything you can do to improve it, taking it into a digital platform, it could be a data platform, a knowledge graph, whatever it is, you're already opened up new efficiency gains, right? So yes, data is the perennial problem, but I think people get caught up in it. Oh, my data will be perfect next year. It'll never be perfect. So starting now is something we keep advising people, and then iteratively improve on it.
Yeah. Fantastic. Thank you. Thank you very much. Let me go to the next set of questions. And Raj, let me pull you in first, and then Amit, and then Shane. Raj, in sectors again like refining, fuels, chemicals, aviation, clean power alone is not going to be enough to reach net zero. It's a pipe dream to say that's the case. What combination of technologies are you seeing? Biorefineries, CCU, efficiency movements. What kind of things are you seeing around the world, which you could share with the audience today?
Yeah, no, that's a good question, but also that question we can go on for an hour.
You've got 20 minutes.
Yeah, but let me give a little bit of perspective in that, right? So if you, as you said, electricity, power, clean power alone is not going to do it, just because there are large sectors of industry where electrification is not going to work. Even for cars, which we all thought is going to work great, think about electrification did really well, but then now we are at a point where internal combustion engines have become very more popular in the last couple of years. So it all starts with like, if you think about the main things that we are looking at, whether it's renewable diesel actually has become very popular in many parts of the world, and that's how we started with. That sustainable energy era started with a lot of renewable diesel, and that we have established a lot of good technologies. But the place that we are struggling in that right now is availability of feedstock, as I said. And the more more different types of feedstocks that we can work on rather than just relying on used cooking oil or the heifer-based feedstock, extending that feedstocks to whether it's biomass, whether it's methanol, whether it's ethanol, and then making it much more energy efficient and reducing the cost of production is where the name of the game is right now in that space. And then the second one is carbon capture, as you said. Carbon capture, there is a lot of announcements of projects. I think I was talking to one of the journalists this morning, like, okay, there are a lot of announcements of projects in India, even in carbon capture, but we haven't seen a lot of investments happening in that space. And why? Carbon capture is, in my view, easy. CO2 capture technology has been there forever, for a long time. But what are you going to do with that CO2? Right? You don't really have the infrastructure to do sequestration in India. So what are you going to do with that? So CO2 monetization, CO2 valorization is something that everybody is focused on. But there are only few things that you can do. CO2 to methanol, and then you take the methanol and then you make SAF. That chain is where the technologies have been really well progressing right now. And I think there are a lot of investments people are looking at in that space, and there's a lot of talk about it even at IEW last year, this year, there's a lot of discussion about it. I think you're going to see a lot of investments in that space. As I said, once you start the seed investment and then some investments happen, I definitely see a lot of improvements in that space in terms of cost of production decreases. But I think that is where that industry is going. Pretty much carbon capture and then taking that to methanol and then methanol to SAF, or stopping with SAF and using that as a marine fuel or something like that. And then hydrogen. Hydrogen is one area. I'm a little disappointed in that space because even though green hydrogen has been talked about for a long time, there's a good, actually India is maybe the pioneers in that space. A lot of good work has happened in India on the hydrogen. The rest of the world, a lot of dabbling with electrolyzers and other stuff at a smaller scale, but large investments are happening in India on the green hydrogen space. Good amount of work on the blue hydrogen space in the rest of the world, which I think is in a good shape there. Ultimately, those investments will more happen if they can find an alternative to that, as I said, monetization of CO2. The captured CO2, if they can actually, whether if they make ammonia or methanol, what are you going to do with it? Are you going to get an offtake at a premium or not for that, for the investment that you're putting in? So a lot of investments happening in a lot of different places. But more importantly, electrification is also, to me, is the name of the game with existing infrastructure. Yeah. If you have a refinery, if you have a petrochemical industry or cement and power industry, replacing those reboilers, replacing those heat exchangers with simple electric heaters or electric equipment has given a lot of, decarbonization. I think people undermine that and go big sometimes, but small things can add up. Fantastic. And that's something that we have seen in the industry, especially I think India is adopting that a little bit, and I've seen that in public sectors where we are working closely with a few of them in electrifying their existing refinery process units. So that's been a good uptick.
Lovely. So, and Amit, when you at Tata Consulting Engineers are looking at serving your clients, do you see a significant shift in terms of companies trying to use more green energy, electrification, or are they trying to see a combination of the newer renewable energy sources? What's your take on it from your vantage point?
Yeah, so, in the last 5 years, we did a lot of feasibility studies, the initial, FEL 1, FEL 2s. And first, as I said, to start your business case or embark on this journey of energy transition, most of our customers looked at circularity because we kind of gave them the maths behind circularity is something that'll give you a business case that's viable. So we've crossed that first hurdle. Most of the recycling plants in steel or recycling in aluminum, copper, that's happening. We're doing global projects, both in Europe, US, as well as India, Middle East. The second part is, and I want to touch these three themes. The first theme is, if you go to renewable sources, how do you marry electronics and flywheels? And that's resilience. And let me explain this. When we looked at traditional power base load, it had a flywheel in it, and sudden demands of high amperage, the grid was stable. When you go to solar, wind, which is a grid following rather than grid forming, these networks and grids can't handle that load that the industry requires. And so there is a struggle between how do you balance flywheels and power electronics, because you can't have a virtual flywheel take such high loads that, say, a refinery, reformers, electrolyzers, or induction motors require. So that's the first theme. How do you marry virtual flywheels with physical flywheels to get the stability when you get into a mix of renewables and base load, irrespective of any industry? You want to shift your furnaces to electric fired furnaces, but you've got motors, the load out there is varying, and so that gets the complexity. So that's number one, and we're trying to figure that out, marrying the power electronics and the turbines and generators and flywheels together. The second thing is the capex and opex marriage. As I said, there isn't a greenfield strategy. Most of the strategies are a combination of brownfield and greenfield. And unless you truly connect capex and opex mindset inside your company, you won't get the total cost of ownership that's as planned, because you'll get into new challenges as you embark on this journey. You will look at value adjacencies, you look at energy balance equations, you look at product mix, input-output changes, and the market will change suddenly. We'll have either commercial challenges or technology roadmap challenges. So you've got to be nimble and agile. And to do that, the second theme is, how do you marry the capex and opex? Simple example, how do you get the projects team and the operation teams to be completely aligned for a very nimble and agile assets as you are in the energy transition? And that's where the digital story starts in with digital twins. It's no longer a nice to have story, it's a must have if you are balancing your energy transition story with both electrifications and the physical flywheel that you anyway need. And the third theme is the advent of AI. Of course, AI is an opportunity with all the story we are hearing on data centers and the surrounding value chain, but both stability of your energy with multiple sources, the capex opex bridge with the digital twins, is how do you leverage your know-how to rapidly innovate and align with the sudden demand changes in the market, including technology leaps or complete changes. And AI no longer is based on just 3 years back. We were looking at prognostics based on all data to have LLMs be taught first. I think the way AI is leapfrogging, actually we are seeing weeks and months tangible outcomes coming with the data that resides in the four walls of the enterprise. So if you have traditional processes, if you have both OPEX, CAPEX, and processes that you did in your industry, and you leverage AI, you're innovating faster. We're working with 2-3 customers in the hard-to-abate sector, cement being one, steel and aluminum, and the focus on rewiring the energy product with their in-house know-how, knowledge bank, and their process licenses with AI tools is phenomenal. I think these 3 themes will determine how the energy transition, the energy stability, and multiple sources of energy will balance and coexist. And last but not the least, as I said, unlike some of the other economies, India is going to quadruple its energy requirement for 8,000 terawatt hours to almost 27,000 terawatt hours. It's going to triple its steel from 120 million tons per annum to 300 million tons per annum. We're going from 500 gigawatts of power to 1,000 gigawatts of power per year by 2030. So amidst this transition, you have to keep on addition also. So all forms of energy, all forms of circularity, and a complete CAPEX, OPEX integration is a must for this journey to succeed.
Thank you, Amit. And Shane, when you work with clients, just for them to evaluate the impact or the financial feasibility of different types of feedstock, different technologies, does the digital twin or technologies at Kongsberg, are you able to provide a clear view to companies saying this path is much more profitable, shorter turnaround time, return on investment is faster? Is this an area that you're working at Kongsberg using AI, using advanced language learning?
Oh, absolutely. Yeah, I think every tech company has to start stepping into that, or otherwise they can't call themselves a tech company in my mind. But it's back to, there's always different parts of the life cycle of any given asset. There's the design part where we offer a lot of services there, and that's a mix, because as an industry, we're still very risk averse. It's a highly critical, safety critical industry. And I use this word purposely, unleashing black box AI into that's not the right way to go about things, right? There's still, when you think about these large language models, where were they trained? They scrape the internet for information. A lot of the information on how we operate and maintain our assets, it wasn't put on the internet. Right. It lives in-house. So what we go back to the drawing board and say, simulation is having this revival, and it's not just specifically from Kongsberg, but these physics-based models. And I really liked what Jensen Huang said last year, where the next wave of AI, industrial AI, is about understanding the physical world. And this is where that hybrid mix of inertia, momentum, all of this stuff you can simulate using physics is becoming really important. That happens in the design phase. So that blend we do offer with our own tools, but we also offer it through third parties. And I think that is very key for having grey box or explainable AI and how we actually design and build our processes. When it comes to return of investment, we hear a lot about that. You can kind of spin this a little bit different, return on value. On the operations side, it's happening. You see this in multiple areas, like in cement, as we mentioned already, taking out 2 to 3% on these smart kilns. On steel, just understanding the core temperature of these rollers. You've been able to take about 4 or 5%. Energy efficiency out of there. And this is something where I see happening in pockets, but not really being shared. And that's one of the core principles of digital. It's about being open, about sharing this. And I feel that's a little bit lacking. Mm-hmm. It's kind of a collective hurdle we have to overcome. Yep. This isn't a problem just for India or Europe. It's a world problem. So more and more these what people consider a competitive advantage should be shared inside organizations. And that's what digital is really good at.
That's a fantastic segue into the next question. I really wanted to ask the fellow panelists saying, do you see a lot of cross-sector collaboration? Do you genuinely see fertilizer, oil and gas, cement, etc., sharing good practices, or as Shane pointed out, most of us keeping it hidden, saying competitive advantage for ourselves? Are you seeing, and could you share some examples of what you're seeing for cross-sector collaboration in India, outside India? Would be delighted to hear your views. Raj, Amit.
I can start. I think the cross-sector collaboration has to happen, especially on the digital side. I'll give an example in this space. We, as Honeywell technology licensor, we provide licensing to multiple different technologies, whether it's a refining sector or petrochemical sector or other areas, and connecting those process units that are operating at any different part of the world is important. And the reason for that is once you connect those units, you get a lot of data, and we talked about how data is important there. But then using that data to help our customers operate the plants much more efficiently, because we are the ones who develop the technology, we are the ones who actually have the inherent process models assigned with it. But now you're not only connecting one process unit, but if you think about entire refinery, that includes not just one asset in terms of one particular refining, but you have petrochemicals, but then you have utilities, but then you have other parts of the network there. Connecting all of that stuff and getting the data and then harmonizing the entire plant is what the name of the game is right now. And within the last 5 years back, when we actually talked to our customers about connecting the units and getting the data and helping them operate efficiently, there was a lot of pushback. Today, I don't really have to do that. Okay. Customers are actually asking us to be able to get this connected and get this data to us so that they can help us. We can help them. And we have seen a lot of improvement in that space. And that's where I think a lot more cross collaboration can happen in making it much better. Within the last 2 years, we have connected about 1,000 process units. Wow. By December last year, we did our 1,000th process unit connection. Well, connection is not only connection, getting the data and helping the customers in operating it efficiently. That's where we talk about a lot of decarbonization using new technologies, but decarbonization using AI, because you can operate it much more efficiently, is where I think cross collaboration can help significantly.
Thank you, Rajesh. Amit, anything from your side?
Yeah, I think all the industries that are looking at electrification benefit in already that synergies we try to do through our own networks, especially when you get to electrification. As I said, how do you marry the base load with the intermittent renewable load, a renewable generation? And so that is definitely required for chemical, steel, refineries. So that's the electrification and the stable grid strategy. And people are collaborating on that, number one. That's electrons, right? The next is hydrogen. If you want to decarbonize, you have so much of theory on with hydrogen, whether it's steel, whether it's refineries, whether it's chemical, low energy physics. But how do you get the hydrogen at a point that it makes it viable? At $6-7 a kg, it's not viable. Everybody wants to break the threshold of $1 a kg. I think that's where, I would do injustice if I don't talk about the Shanti Bill, where nuclear can be a great strategy world over with the renaissance of nuclear to really get you hydrogen at $1. It provides you steam at high energy, high temperature, but also base load. And to use that, I mean, the best way to produce hydrogen is to crack water, because with electrolysis, the percentage efficiencies are very low. But having said that, the small modular reactors and the large reactors, and what India is embarking on the 100 gigawatt nuclear mission, which adds to the gas economy, the oil economy, the coal, everything else, right? It's not competing. It's all additive. So everybody's looking at how to leverage nuclear in a strategy with private sector now allowed to operate, especially in India after the Shanti Bill. And the third part of collaboration is, at the end of the day, whether you do electrification or hydrogen, at the end of the day, you got to marry the brownfield and greenfield. And that's where the asset life cycle and smart plant strategies work. So we're finding people experiment. Initially people thought this is an IT project. And then they realized IT cannot do justice to this. This is deep process domain, which is integral to where you work. And so they became a completely engineering-led project. And that's also not true. So it's a Venn diagram. And then we invented the word IT, OT. And I think that's the third part where industry must collaborate. It must not look at, this is not invented here syndrome, I'm different and they are different. The IT-OT collaboration is a true area where adjacencies, best practices can go and leapfrog cross industry sectors. And if you get the IT-OT right, your electrification and the hydrogen strategies will really yield results on your energy transition and be viable and with tangible outcomes. You don't have to look at subsidies and policies, but you're reinventing your business, rewiring your business. And I think that's where we are trying to facilitate through our own channels of communication and policy levels to get the IT-OT right.
Gentlemen, I would just say thank you very much for your detailed insights, all of you. Really appreciate it. I did notice Cassie walking across. I'm assuming a slipper will come flying our way if you don't evict the stage quickly. But once again, delight, wonderful meeting all of you. Thank you so much, and catch you for the rest of the day.
Thank you very much.
Great. Hello. Very good afternoon to you all, ladies and gentlemen, and thank you for joining us at India Energy Week 2026. And today for this panel, we have a very prominent lineup. We start with His Excellency Ahmed Al-Kabi from UAE's Ministry of Energy and Infrastructure. Then we have Mr. Prince Dhawan. He's the Executive Director at REC. Then we have Mr. Naveen Srivastava from Power Grid Corporation of India. And then finally, Ms. Suman Chandra. She's the Director at Ministry of New and Renewable Energy. And before I begin with the topic and topic of the discussion, I just wanted to share a few stats with you. So at Bloomberg NEF, what we do every year is we try to understand and calculate how many dollars are going into energy transition industries every year. And energy transition industries includes power, electric vehicles, grids, and emerging and mature renewable energy technologies. Overall, what we found is that in 2025, $2.3 trillion were invested in the energy transition business. A bulk of it went to the electric vehicle industry, but on the power side, a lot of investments went into the grids as well as renewable energy generation. So out of that $2.3 trillion, which is roughly 8% up from last year, about $500 million were spent on the grid investments as well. So around $500 billion was spent in building grids. It is up slightly because many governments are trying to raise and build more grids, and then the equipment prices have also increased a little bit in the past. So that is leading to some increase in investments overall. But India at this moment is at an inflection point. We already have grid, which is getting 15% intermittent energy from renewables. This year, we are expected to cross 300 gigawatts of non-fossil fuel energy capacity, and the target is to take it up to 500 gigawatts by 2030. So it is clear that there is a big push towards having more renewables and more energy transition businesses play a bigger role in meeting India's energy needs, but the grid part is still where there needs to be some more development to take place. And that is what we are going to talk about over here on this panel. So to kick it off, I'll first ask Ms. Suman a question on the on the grid side. So let's start with the big picture, overall big picture over here. So with the rise of this intermittent renewable energy, which I said is already meeting 15% of our energy needs, how will India manage the high renewable penetration as we go further? Because 5%, 10% were fine, 15%, this is where we are starting to see some level of involvement of other technologies. And then as we go deeper, we will need to innovate. So what is happening? What do we plan to do?
So congratulations to India. We have renewable energy. It is variable, and by that very definition, it provides you an opportunity to look at the ailment of the power sector de novo, right? Otherwise, we would not have looked at our grid is old, it is not amenable to, the penetration of different fuels. We have issues to ramp up our game in digitalization, modernization of this infrastructure. We cannot forever sit on the legacy infrastructure. So therefore, I feel this is an opportunity, a huge opportunity and a huge lesson that India sits on. We have non-fossil. And we have already started to feel the heat of how when certain energy, which is economically making sense today and is easily deployed. Mission is not able to keep the pace, and therefore we are suffering curtailments, right? You have majority of the generation center of the renewable energy in the west and the southern side, and you have the load centers on the eastern side and the northern side. So therefore, what is the solution? What is the big picture? The big picture which is emerging for India is this, that our energy demand continues to grow at a very impressive pace of 5% as our GDP continues to grow at an impressive 7 to 8%. And we sit on a huge potential of using all the energy sources that we are endowed with. Luckily, we have coal, of course, led with emissions. We'll have to drive down those emissions. Luckily, sitting on a huge solar capacity that can be harnessed for, amplifying our economic growth. And then we have now battery storage, which has cost parity, and that will solve, of course, our transmission ramps up, the energy issues for India, and the big picture is promising.
Okay. And there's also a lot of discussion about nuclear energy. Could you throw some light on that, its role in...
Yeah, so there's perpetually this worry about meeting the base load. Currently, coal continues to meet our base load, but we have global pressures of driving down our emissions, and therefore the base load has to shift to a more cleaner, fuel source. So I think the panel which was before us, the gentleman very articulately explained the Shanti Bill. We are moving towards 100 gigawatt of nuclear deployment that is lined up in the 2047 Viksit Bharat scenario, and there are policy ramp up for facilitating the SMRs. So nuclear is going to play an important supporting baseload role as we go forward.
Thank you. So with that brief introduction, I think let's straight away call upon Mr. Naveen Srivastava. And sir, from the PGCIL's perspective, there is a plan to invest about $110 billion to enable more renewables on the grid. So could you tell us a little bit about how is Power Grid operationalizing these advanced technologies to meet the power demand, flexibility, and load flows in the future?
Thank you. Thank you, Shantanu. Thank you, IEW, for inviting me for this discussion. See, India is moving in a very fast growth. You can see that, peak demand in the 10 years, it has almost become doubled. And similarly, you see that at present where we are working, that not only the demand is increasing in a very high phase, what Madam is also telling 5%, 10%. And similarly, there is a renewable penetration. Both has to come together. We have to see how we are doing it. As per National Electricity Plan, around 1.07 billion, we are going to invest in transmission sector for taking the renewable resources to the consumers. So how to do it? Because renewable is basically in the different parts, maybe in Rajasthan, maybe in Gujarat, maybe in Telangana, but the load is whole for it. So transmission plays a very major role, and that transmission initially we used to be in 2005, it is for the growth. Now it is bidirectionals. Now we have to see that even the transmission is having less inertia. So we have to see that the grid which is coming it is robust, it's resilient, it is also automatic, it is to be modernized. So these things which has coming up, not only transmission line which is coming up, we have to see that how to control the voltage. So another additional part like synchronous condensers, SVCs, then these are, because STATCOMs, they becomes the important part of the transmission line for making it that. As far as Power Grid is concerned, we have both the parts, new plants, which is almost $1.5 lakhs rupees works in progress. And we have a legacy of almost 287 substation having almost 1,81,000 circuit kilometers, which we have to maintain also. So these are the two things which we are doing. So what the Power Grid is moving to in this direction is, not only we are bringing a new transmission line, new corridors, maybe in HVDC form or 765-400, but also modernizing our old systems. We are going in a modernization, digitalization in a very high level. We are going with the, see that the grid, our grid becomes totally automative, not only for, health indexing, but also for decision making also. So whatever the best available in the world, like in substations, world first, process-based substation in 765 kV level, India has brought it. It is in Navsari in Gujarat. Similarly, as far as transmission line is concerned, the first transmission line pilot project for the dynamic line loading, which is very important to use the same corridors to take the power. That also we have done it. We are going in the modernization way in the, operation and maintenance AM that we are going for vegetation management that through that the transmission line. We are having availability of 99.85 above, which we are continuing, and we are coming with the best available technology in the world. We are coming with the asset performance management also. This is you will see in next 2 years, it will be one of the part of that. So grid modernization is also an important role other than the grid integration.
Thank you, sir. And you spoke about automation of the grids. And I have a question on the security part of it, but I'll come to that in a while. But meanwhile, I would like to bring you, Your Excellency, into the discussion, and especially from UAE's perspective, like during the COP in Dubai, there was a big target of tripling the renewable energy capacity of UAE. And with that target in mind, what do you think are the major challenges from the grid side that could come up in enabling such a transition, especially as you are seeing a lot of investments and demand coming from the AI industry, AI data centers, as well as electric vehicles in the kingdom?
Thank you very much, Shanta, for this very important and strategic, questions. But before I go more for the feedback, I would like to give just very high-level brief about the UAE system related to the energy. Energy transition in UAE is not new. It has started long time ago. But what is new with UAE, how we can be more creative and innovative for facing any challenges to be solved. So we started in 60s with the oil, then we moved with the gas in 70s. 2006 with the renewable through our international company Masdar, and then with fully commissioned nuclear 5.6 gigawatt in 2024. With, of course, the wind started around 100 megawatt in 2023, and it will be double in coming years. In addition to that, we have the hydropower, around 250 megawatt, which will be coming soon. So this is basically the energy mix what we have. Currently, we have around 7.2 gigawatt of the solar. And this volume, it will be tripling in 2030. And we are targeting actually to reach not less than 23 gigawatt in 2031. So this is very brief, the landscape for the energy mix in UAE. So going back to your questions, which is very, very important. Actually, of course, there is a challenges, but always there is a solutions. What we see, I have two main important points. The one related to the grid flexibility and stability with all these penetration and the renewable. As all you know that the renewable, especially solar and wind, it is variable and non-dispatchable. So every time the renewable increase, there will be, it needs more maintaining the stability, frequency, and the voltage, and which make the more complex to be treated. What we did in UAE as the key actions, we are now advancing the grid code in UAE, and also we deploy heavily the AI for all related AI demand forecasting and load management. And just one most important thing that I would like to highlight. Last year in January, we tender a very strategic project, and actually it is a very unique one globally, where we are going to produce 5.2 gigawatt of the solar and around 19 gigawatt hours related to the batteries, and only 1 gigawatt for the transmission. So we will be able to produce the power from the renewable, the solar, 24 hours, which can enhance the stability of the grid itself. Another important point also for what we see the challenges, but of course there is action already taken, is dispatchable capacity balancing. So with all this massive deployment of renewable, there will be, of course, time, morning, evening, seasonable variable, that the outcome of the renewable, it will not match the demand. So what we did as action in UAE, we tried to provide the hybrid solar with batteries to provide the stability for the grid itself through the CCGT. And also, as I mentioned at the beginning, we will announce the hydropower electricity to be provided around 250 megawatt. That will give us support for the stability for the system. In addition to the network grid with the cross-border countries through the GCC-IA or the potential project with India. In addition, we have also UAE national demand side management. So there is a challenges, as I mentioned, but also there is always a solution to manage the stability and the flexibility of the grid.
And the answer is in supersizing.
Yeah, thank you.
All right. So I liked what you say, that there are problems, but these problems have a solutions. They are not something that is totally insurmountable. So one of the challenges that we often see in big infrastructure projects is financing. So I think maybe let's touch a little bit about some of the market friction activities and financing aspects of the grid investments. So Ms. Chandra, bringing you into the discussion, so these transmission upgrades, energy storage projects, and digitalization of the grid, these are all very capital intensive projects. And these are generally not visible, like your power generation asset is very clearly visible, but other things, they remain unnoticed. So in such a scenario, what policy or financial innovations do you think are needed to crowd in long-term private capital into these sectors?
That is very clear.
Sorry, that was a question to Ms. Chandra, but
yes. Okay.
But sir, you are also,
okay.
Please.
No, it's okay.
Okay. So what investors look at once they are making an investment decision is risk and the long-term trajectory and a policy stability. So once you give a signal, and you couldn't have had clearer signals from a country like India. Mm-hmm. We've never been a climate denier. Trajectory of our net zero lined up till 2070. We have our short-term goal lined up till 2030. We have Viksit Bharat framework lined up till 2047. That gives a very smooth investment policy signal framework. Now, what kind of finance do we want to funnel in? And we have not been able to. There are different numbers. Bloomberg puts almost like 190 to 200 billions per year that is supposed to be invested in the renewable energy sector alone if we have to meet our 2030 goals. So therefore, we need a lot of mezzanine finance, a lot of blended finance. We need a lot of patient capital that has to come into India. But as we go forward, we shouldn't be giving confused signal to the market about any segment of the power sector, be it our traditional thermal, oil and gas, be it renewable energy, or the upcoming, nuclear. There has to be space for all these fuels to grow, and that policy environment and financial stability and risk hedging should be made available.
Okay. Any particular solutions on the policy front? Like we have a good, strong structural framework
Yeah, we have strong structural framework, and we have a lot of supply side and demand creation that is being taken care by the government in terms of big schemes being announced and offtake being ensured. I know, like, the elephant in the room for renewable energy sector, probably which you might want me to address, would be 42 gigawatt of PPAs not signed. But let me tell you, that's not a renewable energy de-acceleration story. If at all it talks about is that we are pivoting to a phase now where we are not looking at very vanilla kind of installments. We are maturing. We are maturing in a way that we look at things from a more tariff rationalization point of view. We look at things from a more infrastructure systems approach in the power sector as a whole. And that's a good signal to the market for investment-friendly infrastructures to come up.
Got it. Mr. Srivastava, did you want to comment on that part, on how do we bring in more capital to the grids industry?
That is okay. I was also telling that whenever we want to bring a private sector into, we see that it is bankable, and it is clearly they see that there is some profit is coming out of that. That is a point which is, and tariff based competitive bidding in transmission sector is one of the great achievements there. That I'm seeing that in whatever the biddings are coming up, almost in one of the biddings and 10 or 11 parties are quoting. So they are coming up within that. You can see the BSS, quote has come out, which is, 1.7 paisa. This is where we can see that private owners wants to come in this area in transmission sector.
Got it. Well, Mr. Dhawan, thank you for being patient with me, but I would like to bring you into the discussion now as well. We heard some of the challenges, but from your perspective, what are the primary bankability hurdles that you see in renewable projects currently? And then, REC is also the nodal agency for PM Surya Ghar Yojana. So how is REC simplifying credit for residential rooftop projects? So if you could comment both on the utilities part, what are the main hurdles, and then how are you simplifying the rooftop projects as well?
Well, thank you, Shantanu, and thank you for inviting me and having me here. From the perspective of a financer like REC or our sister organization, parent organization rather, PFC, I would probably remark bankability is a question, as Madam had rightly said, of risk and return. So let's first talk about the risks. How do we look at some of the risks that have recently started to emerge? So one of them for sure being the PPA signing risk, which he addressed. But from a banker's perspective, it is a risk nonetheless. So if I put capital on a project and the PPA is not signed or not honored, or there are renegotiations, so that becomes one of the major risks for the renewable sector. The other second risk that we also have seen emerging is lack of transmission and evacuation capacity. So if a project is even with a signed PPA not able to deliver because of cancellation on those accounts, then that severely impacts the sentiment in the sector.
Mr. Srivastava, I would love to get your view on this after Mr. Dhawan is done.
Right, hold that thought.
Lack of transmission.
Hold that thought for a minute before Mr. Srivastava comes in. The third important risk factor is also in terms of the kind of provisioning norms that are mandated in the ecosystem here today. And for instance, you need to have some amount of 75% of land or 50% depending on what kind of model you are adopting for a particular project. You need to increase your provisioning in case the COD gets delayed, even if the delay is within the acceptable timelines. So these are three very, very key compartments of big risks that we see in the renewable sector today. And the fourth one is also uncertainty still around generation capacity because of the vagaries of so many other factors that may not be in your control, and there could be curtailment risk by the grid. The grid curtails you down, the weather curtails you down. So there could be many things, and as Chandra madam rightly said, so time is up for vanilla projects now. You need to come up with FDRE, fixed and dispatchable. You need to come up with new innovations to address this risk profile. On maximizing the return part, so because there are two aspects to everything, so about viability is about risk and return. So on maximizing the return part, as we were just hearing, the bids have become more and more competitive. There are multiple players coming in. Some bids we saw recently were extremely disruptive and extremely low cost. So I feel that there is little wiggle room there now. Because that is purely a market-driven play, and that would be left to the forces of the market there. But I think stability in terms of policy certainty is one thing that can maximize returns to some extent from a banker's perspective. That was part one of your question. Right, and
second part was on how is REC helping build more rooftop projects.
Right. So about the part two for the rooftop solar. See, rooftop solar is a different challenge because it is small scale financing at small financing, but at scale. So we need volumes, but the quantum is small. So I would say standard would be a 2 lakh rupee loan or slightly less than that, and then some amount of that is compensated with subsidy, etc. But you need volume in that. So how REC in tandem with the Ministry of New and Renewable Energy works on this project is we have standardized the processes. We have standardized the way you approach banks to get credit. The rates are fairly affordable, between 5 to 6%. In fact, the dispersal, the sanctioning and the dispersal are all digital. Minimal visits, physical visits to any sort of bank branch. In fact, recently we are also experimenting in some areas with 0 visits to the bank branch at all. So it's completely end-to-end digital. So you standardize the process, you immediately disperse the subsidy, so that hits the loan account and increases the viability of the loan. So those are some ways in which REC and MNRE are working together to address the issues. I would say to just expedite the progress of the installation of the scheme from the financing perspective.
Got it. Well, Mr. Srivastav, there was a comment about projects getting delayed because transmission capacity is not available.
One thing I could tell you, when the projects are coming in, there is always, when the projects come, they come with the challenges. One is the factor is, there are 2-3 things. One is the ROW, everybody knows. Whenever we are constructing a transmission line or HVDC lines, from certain areas, it's nobody will give you as a, red carpet, they will not come. There will be problems. But there is, government is coming with a lot number of policy. Now it is streamlined also. They have increased the, compensation rates and all. It is becoming important. And now the timeline also, it is getting reduced because you can see that renewable generations are coming either in Rajasthan and, Gujarat. There is a limited corridor to bring the lines from there also. So there are land issues, ROW issues. There are challenges, but I don't feel it is going to have any sort of, congestion like status. Lot of lines are coming up. You can see the way the lines are coming up, even in 24 months or nowhere in the world you will see that the lines are coming in 24 months as India is coming up. Of course, there are challenges, there are issues which we all have to come out with the policy as well as with the execution part.
Got it. And so we also spoke about the rooftop projects, but do you think that if we have too many rooftop projects, would that create some disturbance on the grid side, especially if we don't know which projects are these, what capacities are these? And I'm coming from the background that there are certain distribution companies in Southeast Asia that I also look at, wherein the DISCOM doesn't have any idea how many rooftop projects it has on its distribution area. And that can, create some misalignment in terms of planned demand versus what the actual demand on the grid. Do you think it's something that can be solved in India's context?
It's to me.
Yes, sir.
I tell you, when a demand side management is there, it is always better for the grid. There is no doubt in that. So demand side management is coming up, and it is going to, because whenever renewable integrations come out, it comes with another challenges, which I was telling in my first days. We have to see that the voltage profile and all, it's getting disturbed, because initially there used to be a thermal stations, their rotors and turbines, they used to help in inertia. They were the demand side, generations were there in different places. But now the renewable is in a certain places. We have to come out from Rajasthan to Odisha or to eastern part. So there will be a point of that. But I can tell you these factors are getting nullified by bringing new technologies like STATCOM and all, which is helping in the grid stability as well as. So resilience is very good. I can tell you how Power Grid is maintaining 99.85% availability. You can see that almost Power Grid 60 to 65% line have not even tripped single time in whole year. So this is the way, and we are having the best availability in the as if you see in the world also. Our outage rate is also 0.27. It is one of the above our international standards.
Got it. And talking about the maintaining high levels of reliability, I would want to touch upon the cybersecurity angle as well. Like, given how the risks with cyber threats, and we have had known examples wherein some malicious groups were trying to introduce malwares in various parts of the power system. So in such a scenario, how do we deal with cybersecurity to ensure that we have a secure, reliable, and resilient grid?
I tell you, that is okay. Whenever distillations comes, it's come with another cybersecurity risk. But I'm telling you, it is a requirement of the day. I can tell about Power Grid. We are maintaining almost 287 substation and 181,000 kilometers of around 5 gigawatt of MVA capacity. This is only possible when we have to digitalize the system. Because at present, I can say that 30 terabyte data is coming up. So once the new substations are in by 2030 and all, we are going to touch around 330 substations. So this is expanding and all. So there is no doubt digitalization and modernization, automation is a requirement of the day. We have to do it. And we are doing it also. Of course, cybersecurity is one of the aspects which we have to see it. I can tell how Power Grid is working. Power Grid, I can tell you in 4 major. First of all, we will go in the design sector also, design part, that how cybersecurity we are doing it. I can tell you, we have a OT system separate, IT system separate. We have our own company, there's a PowerTel, which is operating optical fibers, and they are being used for the OT. So OT and IT are totally not connected. That is in the design part we have done. Secondly, in the operation part, we are having security operation centers also. It is not only for IT, for OT also, which is 24 hours maintained. Even UNMS also there, we are seeing that the data which is in the communication part also being monitored. Any intrusion, it is trying to that. We are totally separated the IT and OT system and operation also. Digitalization, we are telling you that we are doing it in a large way. It is health indexing as well as for the performance management, we are doing it. So these are the things we have to be best, firewalls we have to see. We are continuously doing the audits also. We are continuing, we are red tapping also doing it. We are trying to intrude ourselves also to see that our system is very strong enough. We are being monitored by, Government of India, CSERT, as well as NCIPCs. Whatever their policies are there, their frameworks are there. We are 100% we are maintaining. We are having advisory boards also. That keep on telling us what is the best available in the cyber security, and we are, infusing money for cyber security in the large scale, which is the best part available in the world. I don't say that cybersecurity is not the challenge. It is continuously. As we move, the hackers also move in the same directions and all. But we see that our system should be totally isolated. They should be free from intrusion.
Thank you. And Mr. Prince, continuing on the topic of digitalization, so REC is also the nodal agency for the India Energy Stack, which is like a public digital infrastructure. So in simple terms, can you help us understand what this is and how will it enable, let's say, more investment into the power sector. So how does it make transaction easier? How does it enable more smarter financing? Or are there other business models that we can expect to emerge out of this energy stack?
Well, Shantanu, let me first give you the very big picture about technology. I'll just make two important perspectives about how technology is going to shape the development of the power sector and set the narrative in the times to come. So this is perspective one would be that you see it says the era of the electrostate. So the electrostate in the times to come, as we electrify more and more, there is not going to be scarcity of electrons. We see so many generation capacity getting added. What is going to be scarce is coordination at scale. What is going to be scarce is trust, interactions, trustworthy interactions, coordination at scale, and inclusion. That is what is going to be scarce, and countries, electrostates that can manage this coordination using technology are what will actually empower the consumer in the end. The second perspective about technology that I would like to give here is that technology in the new, up till now we have been talking about energy affordability for the consumer. But technology actually would now, in the new welfare state, talk about energy agency and energy income. So till now, energy has been a cost for the households, and it was usually either subsidized or cross subsidies are widely prevalent in the tariff structure. But what technology is going to enable is inclusion and participation and making the households to be able to earn through these rooftop assets that they have. A farmer would be able to earn by shifting his or her storage pump usage on the field at a particular time of point. An MSME will be able to earn by shifting their demand to a particular point of time. So that is what technology will enable. And the India energy stack is exactly doing this. It's essentially standardizing the way and grid entities access each other's data and interact and contract with each other. So let me give you an example. If today I have a solar rooftop on my house, can I and my neighbor is willing to buy it from this energy from me, can I sell it to him? And is that even possible? Can we think of a time where I can actually, sitting in Bangalore, or I have come to Goa and my solar rooftop in my house in Delhi is still generating electricity. Can I just sell that electricity to someone in Bangalore? Or maybe can I just gift it to my parents? Can I just give it as a Diwali gift? Here's free electricity for you, mom and dad. That is what the India energy stack is going to enable. This is one use case. There are so many use cases. You spoke about DER integration. How do DISCOMs get visibility into the distributed energy resources? One of them is the solar rooftop, but there are other DER resources. There is EV charging vehicles. They are completely an unmanaged load as of date. How do they interact with the grid? Are there standardized protocols? That is what the India energy stack defines. So India energy stack is essentially giving the digital rails that will put the consumer at the center of everything. And then you spoke about what this means for new financing models. So this opens up a whole new market. So now this opens up whole new avenues of livelihoods. It gives avenues to energy micro entrepreneurs. So we will see energy micro entrepreneurs coming in the next few years, as soon as in the next few months, I'm confident, because you will see people or community assets being monetized by participating in this market, this new market, energy market, and then there will be demand for finance, for startups, for companies that will enter this market, or at least enable small consumers to participate in this market, maybe by AI agents, maybe by AI agencies. So that is a new addressable market that will again open up financing needs for the power sector. So I feel US talks about demand response. Europe talks about flexibility. China talks about control. India, as part of the India energy stack, will talk about inclusivity. India will talk about how an electric grid will not just give power, but it will give income, dignity, and inclusion to the consumers. And that is what India energy stack will enable.
So two different kinds of power to the consumer.
Yeah. Yes, 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 exactly.
Interesting. So how soon do you think I can gift renewable electricity to my friends?
We are excited to tell you that on the 18th of February in the India AI Summit, you will have the first peek at it.
Lovely.
Yes.
Look forward to that. Ms. Chandra, I would like to bring you into the discussion again. So there are a lot of emerging economies that that have rapid demand growth, but also have weaker grids. And then they often look at India as an example. So what do you think are the lessons that India can teach them, or if teach is a strong word, what they can learn from India, and what they should not learn from India as well?
I'll take the positive first.
Okay.
Well, if we look at how Honorable Prime Minister Modi has constantly steered the Global South leadership, we have ample examples in all domains, including energy, where lessons from India can be learned. If we particularly focus on the clean energy sector, we have massive success in the decentralized renewable energy that is replicable in many of the countries in the Global South. That includes our amazing feat in the agricultural solarization, whether it's replacement of the diesel pumps with the solar pumps, or it's the feeder level solarization itself, which kind of, allows farmer to shift the entire load during the daytime. And now, of course, they can earn also with them in the prosumer mode. You have rooftop solar, each household. See, rooftop solar, you have to look at not just from a point of a deployment. It's world's biggest rooftop solar program today, what we are running. And that is essentially to also create a nudge for each household to understand the value of renewable energy and clean energy and demystify it at a household level. So once you demystify it at a household level, that nudge is also replicable. Because once you have demystified it at household level, then the offtake of the peer-to-peer services, which Prince was just amplifying just now, it's more consumable, it's more addressable, it's more palatable to them. Otherwise, it sits as a foreign concept, which is very technical and people can't understand. So these demystification, dejargonization, decentralization, inclusion are the lessons that the Global South or even the other emerging economies can take from India. What they should not learn from India, well, just in the favor of being politically correct, I'll pass that question.
Fair. Your Excellency, we heard about how other countries can learn from India, but why just India? Why not can we learn from India? UAE, are there any particular things that you're proud of that you think should be replicated throughout the world?
Actually, we are learning from each other, and we are learning a lot from India. With the UAE, I mean, there is two things very important: the partnership and the technology. And this is within the system of the UAE. And as it has highlighted yesterday through our minister, that UAE opened all the doors for the investor to come. They opened the doors for the partnership to come and for win-win benefit for all. We did actually a number of projects with the private sector related to the energy efficiency. And it was a very interesting project. We invited all the private sector and we handled a number of government buildings to reduce the cost and do some saving from the consumption. And it was very interesting for the first phase. We saw there is a saving around 27% from the first batch. It is now already in the execution with the private sector, one of the international company. Now we are going to double that amount to go for the second phase to open the scale of the government building to do more enhancing in terms of the efficiency of the building. Other things, I mean, related to the hydrogen, we are also trying our best to reduce the cost with our partnership, to bring more innovation and creativity, to make it more affordable and available in the market. But since there is creative idea from our friend, and this is excellent things, if you ask me about my opinion, what do you think something to be delivered? I'm thinking about the enhancing the wireless power transfer, more friendly, more efficiently. I don't know if that technology can be delivered, but this is very interesting. I mean, I am sure with the fast development of the technology, globally, it will become one day to the market. So you can transfer by wireless rather than the cables.
Are there any other such sectors where you would like to see more innovation or more investment and R&D and funding go into?
I think the desalination sector is very important everywhere, not only in the UAE, because this has touched the security of the supply for the people. Especially in our region, we are having the challenges for providing the water. We depend heavily on the seawater. Having such creative idea, development, technology in this part, it will help a lot for the sustainability for the life of people. So desalination is very significant sector to be focused on.
Great. So for the next question, I don't have any particular person in mind, but Mr. Srivastav, Ms. Chandra, either of you. So recently we heard that the power distribution companies are returning to profitability. The ACS ARR gap has narrowed down quite a bit, and that excites me quite a lot because in the past we have always said that distribution companies are not investing in modernization, not investing in smart technologies because they don't have the money. But now if they are returning to profitability, how do you see this area develop? Do you think that there will be more investments in the smarter things on the grid side? But either of you, both of you?
You can go first.
Actually, I am going to take that question voluntarily, and then Ma'am Chandra and Srivastav sir can add after that.
Okay.
The reason being that REC is actually a nodal agency that ran, one of the two nodal agencies that ran the reformed linked and results enabled revamped distribution sector scheme. And what that scheme was essentially all about was that some investments were made in this upgradation of DISCOM's infrastructure contingent on them meeting certain performance metrics. So it was a completely results driven scheme. And as you rightly pointed out, very recently, the latest figure shows that in aggregate, the DISCOMs have combined posted a net profit of north of 2,000 crores, whereas just 2 years ago, the losses were 5 times that, and even a decade before that, they were astronomical. So this turnaround story is actually a story of meticulously identifying the gaps. What are those gaps? So we identified 3 high priority gaps. Identify the areas where you have the highest transmission and distribution losses for the distribution company, so distribution losses for their sector, and change those infra. So maybe upgrade your cables, maybe install more distribution transformers. So as they say, devil is in the details. So, somewhere you may need to shift some lines to underground. So those are the kind of initiatives that happened to plug this first gap. The second gap was clean your books of accounts. So what that means is that maybe there were some backlog of subsidies or some accounts receivables that the DISCOM was having, and those were all cleaned. So the system collectively functioned pan-India to ensure that the DISCOMs could reduce their accounts receivables and get whatever was their rightful due. The third was contingent on corporate governance norms. So introduce better governance mechanisms in the DISCOM, better board functioning, board oversight. So the distribution company functions as a fully corporate entity within the government, and that has been the key stake. And of course, I should not miss out the biggest smart meter program is being run here in India. 16 crore smart meters have already been sanctioned, and north of 5 crore smart meters have been installed, which is some 50 million smart meters have been installed. And what this gives you is a lot of data, and what data brings with it is a lot of insights, and those insights are what are helping DISCOMs to plug those gaps and hence turn profitable. And we hope that this trajectory will continue in the future. There are more reforms in the pipeline, and we hope to see them happening. But yeah, maybe.
Yeah, thank you, Prince, for putting that in perspective. I wouldn't have been able to explain the pivots of the RDSS scheme, which he rightly have now contextualized. See, I take this story with the boulder of salt. Why I say that of course the DISCOM have had a turnaround story, and there is a PAT which has been reported on an aggregate. Yes. But if you look at the disaggregated numbers, you still have that contribution coming in from the privatized DISCOMs. Yes. And many of the government-owned DISCOMs need to up their ante to get where we want to get today. And therefore, the government has thought and is in the pipeline of addressing this by various means. Maybe one of the measures is privatization, because private DISCOMs have performed uber well. Of course, you have, this entire cleaning up of the books, which Prince talked about. DISCOMs and the distribution sector traditionally has been the Achilles heel of the power sector. Yeah. And with RDSS, that has gradually sort of started changing. So even though the turnaround is happening now in the aggregated mode because of the private sector, it does give a replicable example for our state-owned DISCOMs to sort of now think towards how to corporatize their operations. And if they are not able to, then how to let the reins go so that the political tariffs that cause the distress and the generation dues which cause the distress to the DISCOMs, apart from the T&D losses, which are technical in nature, that is how the DISCOMs will have to revamp themselves when we make our systems future ready. And so far, DISCOMs have been unilaterally part of, buying entities who have just been buying and distributing. They have to now also think about being the energy managers in the next league of our power reforms, where you have so many things coming up. So DISCOMs cannot continue to remain this unilateral flow of operations. They have to be more robust, and not just in their corporate operations, but also in the kind of services from a systems perspective that they are going to provide in the future as we go forward.
Got it.
Sure, we have some time.
I am not going to repeat what Madam Chandra and Prinzi has told. That is really, I'll go a little bit back and say how that has come out. It has, initially we were having a problems of, household electrification to the, it has started, so this phenomena started around 20 years back when the APDRP scheme have come, or Deen Dayal Upadhyay, that first of all, we have that they have concentrated on let the electricity goes to every household. That was completed. After that, then the RDSS schemes and all come. So the way it was monitored, all discoms was monitored, their performance was seen in all the angles, maybe in the monetary angle, maybe in the performance angle. That was when it has started seeing in that direction. And of course, central government has, helped them in reducing their debt also continuously. That has also helped them. Yes, we will come out. Otherwise, their mind was totally on, managing the debt. But once it has come and they come out, of course, the latest, I can give an example when Power Grid is doing certain RDSS schemes also. When we done an underground cabling work in, Varanasi, it was in that area. I was knowing that it was having a, losses of around 27-28%. Once that cable was laid out, it has come down in that area. I'm not telling whole Purvanchal, but in that area, it has come down below 10%. It has come down 9%. So that has given an lookout that yes, we can come out with the, technically as well as financially, we can be more profitable. The system is the best part. So of course, these schemes, which is load reduction schemes and smart metering, which is coming up in a large way, it is really helping them, discoms, to be not only a profitable, but also technically a very strong companies. Thank you.
I just want to come in here briefly because we have always looked at DISCOM's operation from an efficiency point of view. But I would put it out at the open that efficiency is not the only element that DISCOMs contribute to. There's a huge equity addressing that the DISCOMs do to provide low-cost, affordable electricity to service our low-income households. So please do not look at only from a unidirectional point of efficiency. Do consider the equity point whenever you look at the profits or losses of the DISCOMs.
Got it. So we still have some time just to maybe do one rapid-fire question for everybody. So if I may just ask all of you, starting from you, Ms. Chandra, in just one word, if you could describe what is that you are looking forward to by 2030? Like we discussed so many different things that we are anticipating to see by 2030 or are wanting to see, wishing to see. If there is one thing that you would like to see happen, what would that be?
Maybe we start from His Excellency and then we take it.
What I want to see that we will start to export electricity and export and import electricity rather than the normal traditional. We want to see electricity as a commodity.
Right.
So globally connected together, as it highlighted, one sun, one world, one grid.
Right.
So I think this is very important, and this is what hopefully to be. And we will start with India. We have a jointly project. Hopefully, it will come through.
Thank you, Excellency. Mr. Prince?
I would say one word is difficult, but maybe consumer agency, empowerment and choice. So as a consumer, I should be able to decide from where I want to buy, choose the best rates at which I can buy. As a consumer, I should be able to manage my load. And as a consumer, I should have agency in all these decisions. They should not be thrust upon me.
Thank you. Mr. Srivastava?
As Power Grid has done, one word, one frequency. This is the only country working in one frequency. I also see that word will be working in 2030. One word, one sun, one grid, whatever is one grid, I will tell. It is, and we are able to give affordable and quality as well as continuous power to each individual in my country.
Thank you.
For me, just going back to the topic, a welfare electrostate that delivers to its citizen modern, clean energy at the lowest cost.
Lovely. Well, that's all the discussion we have over here. Ladies and gentlemen, please give a round of applause to our panelists, and thank you very much for listening to us. Thank you, sir. Thank you very much, sir.
changed. That makes offshore exploration a lot more compelling today than it was in the past.
Good afternoon. Thank you, Saurabh, for the question, and thank you for having me as well in this panel. Very, very enriching panel, as you mentioned. Well, if you talk about what we discussed a couple of years back and where we are today, let me start off by saying that a couple of years back, our acreage in the country was roughly about 45,000 square kilometers. And today, the acreage that Oil India holds in the country is around, say, 107,000 square kilometers. So that's more than double the acreage that we have. And interestingly, after the last meeting that we had a couple of years back, our offshore acreage has actually increased by about, the total offshore acreage that we have is about 55% of our total acreage in the company. And what has transpired in the last 2 years is that we have mobilized the drilling rig in Andaman, and as we speak, the third well is currently under drilling in the eastern coast, and the well is at a depth of about 3,300 meters. Our target to drill this well is up to 4,500 meters to target the Eocene. And as you remember, in the first well that we drilled, there are 2 objects which are to be tested, and since they are tight, we are going to go back to that well to stimulate it. Unfortunately, in the very second well that we drilled in the eastern coast of the island, we have been able to establish the presence of gas, which is 87% methane. And the indications suggest the gas to be a mix of both thermogenic and biogenic origin. And therefore, in the second well, we are going to go for an appraisal plan. And currently, as we speak, we are trying to mobilize a high-resolution 3D seismic survey of about 600 square kilometers to further delineate the structure and come up with an appraisal program. In the third well that we are drilling, let's hope, fingers crossed, we are at 3,300 going to 45. And also, very interesting to note, you will appreciate, is that we have also spotted our well in Kerala Konkan, shallow offshore, which is at a water depth of 60 meters. The target for the well, we have kept it to 6,000 meters. I think that's going to be one of the deepest offshore wells in the country. Currently, we are at about 1,300 meters. We are going through a difficult formation. We are practically drilling blind. There is nothing coming out in the annulus. But in order to reach 6,000, we have to target two traps. And there lies the challenge, but we are up for it. And this is unprecedented times for the company, because this is the first time that we'll be having 3 offshore rigs operating at one point of time for the company. The third well we are going to spot in the mid of February in the KGDSF block, which will also be sort of an appraisal well. And so, yeah, very exciting times ahead. And what have changed? And why are we so aggressive and upbeat about it? I think there are 3 things that have changed. Firstly, I would say the amount of data that is available currently in the country, thanks to the vision of our Ministry of Petroleum and Natural Gas that you need to have seismic across all your basins if you want to do exploration. So unless the seismic program is run by the government, like we have done the National Seismic Program, we have done the Mission Anveshan, we have done the Extended Continental Shelf. So quite a huge amount of data is available currently, which gives us a confidence to come up with proper geological models and prospect identification. Second thing is, I think, a disciplined execution. And for that, a lot of vintage data is available. It's very critical that we go through the entire reprocessing of the data in the current digital capabilities that we have, and also de-risk prospects by undertaking detailed basin-centric approach rather than block-by-block approach, which coupled with play-based exploration concepts will definitely help us to firm up drilling locations which have a better chances of success. And the third thing that I would strongly say is the new policy that the government has introduced in terms of the ORD Act, in terms of the new Petroleum and Natural Gas Rules Act Rules 2025. A lot of good opportunities for enhancing or encouraging exploration. No revenue share to the government in category 2 and 3 basins till there is a windfall gain of about $2 billion. You're free to carve out your own areas of interest for exploration. You are free to extend your seismic program beyond your allocated block. Like I said, it's now becoming a basin-centric approach and play-based concept. You are also free to apply for extension of your block areas if you think that the structural extent is extending beyond the boundaries. So all this combined together, they are making a very, very good recipe for success. And that's the reason why we feel that we should also take part in this aggressive exploration campaign before we lose out on the race.
Thanks, Saloma, and completely agree with the point about the policy environment being more conducive than it has ever been in the past. And that obviously gives a great fillip along with data and the other enablers that you spoke about. So that's great. Let me now, shift gears and go to Lidan. For us to be truly successful at scale in deep water, it really needs, integration across geology, reservoir drilling, and production decisions, and bring those early enough, right? And from your global experience with SLB, where do you think operators most underestimate the value of end-to-end integration, and how do you see that?
No, thanks, Saurabh. Good afternoon. It's an honor to be here to attending the India Energy Week. It's great to see the excitement behind the deep water growth. But as Saloma said, right, deep water comes with its own challenges as well. Normally, deep water comes with more complex subsurface, more harsher operating environment, of course, the extremely high cost as well, right? So yeah, integrating geology, reservoir drilling, and production early on extremely important, right, for the frontier exploration and development. I wouldn't highlight what operator has underestimated. Maybe I just highlight some of the values which the early integration would bring to to those type of operations. The first one is better subsurface understanding, enable better decision makings, right? So the early collaborations between the geologists, the reservoir engineers and drillers will have teams to refine the reservoir models, identify the
have larger adoption of FOM. This third session now tackles the third leg of this part, which has got to do with technology and innovation, which we believe will be fundamental in making sure that the broader business case associated with CBG becomes positive. The end goal of these three sessions put together is to actually help the government think through whatever is the next version of the CBG policy. And so in some ways, as Mr. Kanuja mentioned this morning, this is about listening. This is actually taking inputs more than just looking at it as presentations. And since we look at inputs and this as a consultation, I would strongly encourage all of you who are sort of sitting, I guess, the traditional backbencher to sort of move forward. We'll be passing around the mic for anyone who wishes to intervene and make comments or give inputs on that. So all of you who have the desire and wish to be speaking, I strongly encourage you to come forward. This is a massive room, and I think this merits a much more intimate conversation around this topic. So whoever is there, please come up. The second is, let me quickly invite all, the people who are on the panel and who will be more of the discussants today onto the stage. Mr. Anil Kumar, Rajneesh Trivedi. First of all, let me invite Additional Secretary Mr. Kanuja to come onto the stage. And then if we could have Anil Kumar, Rajneesh Trivedi, Professor Amit Kumar, Mr. Harshit Agarwal, and Vijay Nirani. Thank you, everyone. And while we have the panelists who have, I'm positive, a very strong point of view on the different matters, and we'll throw it open to them, we really strongly look at you to contribute and intervene as well. I don't want to take up too much time. As we all know, there's a huge impetus and push to make CBG a very, very integral part of our energy fuel and mix, and not just the energy fuel and mix, as we discussed. There's byproducts that can become a part of the larger economic landscape of India as well. But we're obviously, there's a policy out, but there's things that can be done better. And this is a way of us trying to take inputs on that matter. This is focused on innovation and technology. Having said that, there's some of you who didn't get the opportunity to speak this morning. If you feel strongly about it, please do give your inputs on certain other matters as well. We were completely comfortable with that. Before we get on to the panel discussion, we have two presentations that we are going to be doing. I request the presenters to be as brief as possible on around the topics of technology and innovation. We are available to you post this session to collect any other additional inputs. So just so that we can get the thematic out and let people know exactly what we're talking about. May I call upon Dr. Dubash to make the first presentation? Sorry, Dr. Subash. My apologies. Thank you.
Thank you. Thanks for giving the opportunity. So as the topic is advanced technologies and innovation for mainly the commercial scale biogas plants. See, as you all, if you know that this sector is flourishing now, and we really require new technical or the technologies to be infused with these our projects. Then only the projects will really definitely it will generate the gas, as well as the scale of economics will be there. Actually, we mainly focus on our company, the low carbon fuels, especially bio-CNG at present. Yeah, so I just directly come to the point. So what are the main problems at present in India as per our case studies, and how we can able to come up with the new technologies or the innovations so that the project can generate the required gas. And I want to happily tell you that probably we are the only company generated the gas higher than the design capacity. So on continuous basis, maybe more than 20 TPD gas on continuous basis in Hoshiarpur. It is one of the Reliance projects. Yeah, so I'll just come to the main problem now. See, if you go to any projects, especially the biomass based, there should be a pre-treatment technology. But here, as per our survey, normally people use a normal hammer mill or something to just do the pre-treatment, shred it and feed it. But it will not work because you have to pre-treat your the material that is which has a very high lignocellulosic content. And then if you go to the another way, that is a MSW. The MSW should not be handled like how it has been handling now. So normally you have to go for a technology where you have to feed, it may be a mixed phase, just feed it to the system. The system has to take care. And you need not to do any manual segregation or anything. So that is what actual technology is required. So that we are already showcased. You can visit our one of the project. And similarly, the digester technology in India, that is the most advanced technology at present is required. You can say whatever the digester at present in India, what I saw is mainly a single state digesters. You need to have at least a multi-state digesters with the CSTR technology at least. Then really there will be a probability that you will generate the more gas. So similarly, the agitation technology at present is in India is more than like 200 RPM agitators. Actually, you need to go for laminar agitators. So your production will be more, and then it will help you and it will aid you the process. And similarly, the digester heating systems, like if you go to the parameters like all other things, so you need to come up with this new innovation, new technology, so that you will be in the position to go for the new technologies. And one of the best example at what the initially I said, we have already showcased this kind of technology, and we have produced the gas which is higher than the design. And the major challenge, as I said, actually all the projects, major projects, what we come across is having maybe a no gas or a little gas production. And there is a fundamental design issues in the pre-treatment. That is a major issue. There we have to focus more in the pre-treatment technologies. And you can say the robust system, which is a need of the hour. So if you have the system which can last, see, for example, when we are running our compressors now at present, see, we are running more than 20 hours in a day. Initially, you can say the projects where 4 hours, 5 hours, 6 hours it was running. Even the compressors manufacturers has the issue now when we are running more than 20 hours. So the innovation is required in every part. And you can say any project, if you go, the digester system is the heart of the system where you need to have the parameters, and it should be all automated parameters you have to go. Then only it is possible for you to minimize the manual intervention, and then you can go for the higher production. Like all these parameters, like right from your pH, CN ratio, and as I said, the OLR rating, HRT, all these things needs to be taken care. And it has to be, you can say, in automated form, not in the manual form.
Dr. Subhash, AS had a question for you very quickly.
Dr. Subhash, good afternoon. I wanted to know the basic contours of your plant, and what is the feedstock, what is the capacity, where is it located, where are you selling, what kind of CBG, what are you selling, whom are you selling to, where is your FOM, LFM going, are you getting your MDA? So I think technology, obviously you have given the details on the first slide also. If you can just add for a minute, and then we'll be able to appreciate the technological aspects also.
Yes, sir. Yeah. See, actually, our company mainly focuses on the production of, you can say, all the CBG plant technology plus the development of projects. We have done a projects based on the MSW, and then based on paddy straw, even the mixed feed, like paddy straw with the all other biomass waste. So you can say, as I said, we are the only plant at present, I can say proudly, that we have showcased the gas production which is higher than the design capacity on continuous basis. So here the main crux here is the pre-treatment. Whatever the plants you go, either it may be biomass based or it may be any of the other things. But here you have to go for a pre-treatment where it is the, you can say, the only part where it converts the undigestible material into digestible material. That means, say for example, if you go to the plant which is having the more cellulosic content, that you have to digest it. For that, you have to first convert that lignocellulosic into simple sugars. So that is important. So these kind of, you can say, the project, like you can see here, this is one of our plant. You can say inspired by the European concepts. So this is the one plant what we have done for Reliance Industries. We are doing around 14 to 15 projects for Reliance Industries, all 20 TPD output CBG plants. So the design is such a way that you feed the feedstock to the system, then from there it will take care of that.
Yeah. So what are the stages of construction? Are they all commissioned?
Yes, sir. It is a commissioned plant. So it's running.
20 plants or 15, 20 plants of 20 TPD each?
Yes, sir.
And where is the gas being evacuated?
Sir, actually, in Reliance case, they are going for geo pumps where they have that thing. And remaining, they are going for gas grid injection systems. For example, in Denkanal, they are going for, with, I think, BPCL, where in Ankul to Denkanal pipeline, they are going for injection into a pipeline. So different projects, they are going, some places they are going for LCVs to deliver into the pumps.
I think we'll need this data because we add 20 plants to our database. So we'll take the data separately. Thank you.
Yes, sir. Thank you, sir. Yeah, it's from Mr. Subhash. Yeah.
Can we just, if you...
Yes, sir. Sorry.
Let me give you some clearly some small points into it. So basically, the ecosystem what we are developing as far as CBG evacuation is concerned, our CBG GOBP own retail outlets, which is going around 30 to 40% on an average for each and every plant. Balance 60% is going to the CBG CGD synchronization scheme, where we are getting all the supports from the all CGD players across country. Currently, we are planning for around 55 numbers of planning. Around 21 plants has been already commissioned, and average CBG production is around 220 TPD. So we are quite hopeful for the coming 6 months, we will be giving a good kind of a CBG production in India. So as per the second question, what we have asked that whether the FOM and LFOM, what is the status? Yes, today we are supplying the molecules to the farmer free of cost, and keeping in a view of that the MDA in the current level, and there are various challenges what has been already discussed in the first half, and we are looking forward for our MDA enhancement for FOM and LFOM very soon. There are a couple of other challenges what which can be done and discussed separately. Thank you.
Dr. Subhash, is it possible for you to wrap up so we can have
yes,
Gaurav also give
thank you. So this is a plant where we have showcased, and even Reliance has given the gold trophy to us. Yeah, thank you. Thank you very much.
Thanks, Dr. Subhash.
Thank you.
Gaurav, can I have you come and take the mic?
Hi, good afternoon, everyone. So I will take exactly 3 minutes and 3 messages I want to give. So can I have the presentation, please? So before the presentation is up, so normally in biogas field, especially from the technology perspective, we talk a lot about the German biogas plant. And there is a success story. Indian Biogas Association has got a tie-up with German Biogas Association. So normally when you talk about innovation, by default, we think about the technical innovation, but all the time we should consider technical, financial and social. So when you talk about German plant again, so many times we have said this, again I am repeating, that technically fine. So whatever we can do, we should do. We'll come to the slide and perhaps I will talk about it. But in Germany, if you see, most of these plants are owned by the farmers, and these farmers, they stay over there. The plant owner, in other words, they are there at the plant and taking care of the plant. And here in India, in most of the cases, we want to run the plant by remote control. So think about it. I'm not saying that we should do this or we should do that, but while copying anything, we should keep the whole scenario in mind, or I mean, elephant as a whole we should consider. That is point number 1 from my side. Second, from the technical side, we, instead of jumping to the conclusion and talking about any technology or anything, I think we should ask the right question to us as far as the plants are concerned. So we have listed down few of the questions. We'll show it to you, but it's very important because if we go to Europe, they don't have so-called, this paddy straw as such. If you go to Europe, the segregation system or MSW is very different than what we have over here. So we need to be very, very clear from this question's perspective. Let's be very particular. I don't know if somehow. Okay. So we need to be very particular as far as the questions are concerned. Somehow I'm not able to operate it here. Maybe next slide if you can change it. Yeah. So right from the pre-treatment to the digestion part to the upgradation part, and then further on when you talk about the downstream side, it's very important that we understand the intricacies and ask the right question. And again, I'm not giving you the solution over here. I'm just trying to throw light on the right question. For example, we all talk about the fermented organic manure. Of course, we can keep supplying, but it's a demand-driven thing. I repeat, it's a demand-driven thing as far as the fermented organic manure is concerned. If in market there is a demand of PROM, I would like to go for the PROM in that very local market. I come to the next slide. I think a lot has been talked in the previous as well. Subhash talked about the technology, etc. So I'm not going into it, but at each and every stage, we need to see what are the right steps, if there are losses, why there are losses, what can we do. And again, I'm talking about the right questions again and again. Fertilizer is very interesting, and Dr. Shukla, our president, when he was in MNRE, he coined the word biogas fertilizer plant, and this is what we also believe in. I think this is where we need to come together and try to make sure that biogas plant as a whole becomes profitable. Well, I will skip this. Now third minute is running. So one of the third message, in fact, is that still we need more push as far as the biogas sector is concerned. In management, you talk about this push-pull concept. I personally teach in IIM Ahmedabad as well. So we need a lot of push. So here is one of the analysis where we try to study the cost factor. This is almost on the maximum side, depending on feedstock, depending on a lot of things. Still interest, etc. have not been, I mean, they have not been considered in this. But even at high level, if we see, I mean, we say that between 40 to 70 rupees, anything can happen. So let's talk about the 70 rupees right now. Still, we need this viability gap funding, especially to streamline the sector so that the pull factor, which will come ultimately from the market side, that we can see. So to conclude, of course, biogas is a local phenomena. I would rather say hyper-local phenomena, especially from the feedstock perspective and from fermented organic manure perspective. Keep that in mind. And the social part, you have to really consider that whenever you talk about this sector. Last but not the least, this viability gap, which we need to look into. With this, thanks a lot. I think my 3 minutes are over.
Let me quickly throw this open to the panel. Thanks for actually setting the stage, both Dr. Subhash and Gaurav. This session is a little bit about innovation and technology. And so there's one part about technology, but the other part is also about innovation. I want to throw it open to the panelists, and maybe Anilji will start with you. First of all, for BPCL, why is this relevant, important, and what is it that you're doing in terms of technology and innovation that can help?
Yeah, a bit of echo. So BPCL, CBG, it's obvious. We are into CGD segment. We have 52 CGD CGDs. So which is almost, we are the second largest CGD company. So a lot of blending obligation, which is something like 30 plants which we need to do. But what is not so obvious is that the BPCL's largest net zero mitigation measure is CBG. Almost 30% of our mitigation has to come from CBG plants, which means around 300, 400. Strategically, what we are doing is that a 50-50% approach, 50% own investment and 50% through JV companies. That is what we are adopting. And to the specific question, what is that we are doing on innovation and what we are looking at? See, as Subhash said, it's a complicated process. See, actually CBG is nothing but a living biological ecosystem. It's not a plant. It's more of a biochemistry thing. So it has got 4 processes. To be very short, hydrolysis, you need pH 5 to 6. And at the end, methanogenesis, you need pH 7 to 8. So which means that, these are the places where the organic material actually grows well. So you're seeing that you are in a different, the requirements are different for different processes, which is happening in one kettle. We are right now working with one startup where it is actually split. The 4 processes are split into 2. The first, hydrolysis and acidogenesis in one vessel, and the balance 3 in 3 separate vessels. At lab scale, we are seeing good results. We are working with them. If that technology can, in fact, do wonders. Apart from that, also the other factor what we've started talking to is to try to even though we have pipeline connection schemes coming up, but there are still plants which are coming up very, very remote to pipelines where connectivity is not an issue, not very feasible. So there, liquefaction is an option. So liquefaction is very, very energy intensive. Minus 162 is very, very energy intensive. So we're looking at, from the biogas, liquefaction, can we separate the H2S, CO2, as well as liquefy this so that there is a relative better economy. These are few areas which we really find challenging. There are many things I think, has been spoken about. This is a focus of BPCL. We are very serious on CBG. Thank you.
Thank you so much. Rajneeshji, anything that you see in terms of the innovations and technology development in digesters that is going to help the industry?
No, sure. So, look, one of my message here is that, we've been already operating 2 MSW plants in the country. We are already treating around about 425 tons of municipal solid waste across 2 plants in Goa. One of the plants has been running successfully for the last 9 years. Now, I think while there has been a lot of discussion about technology, where is the technology, we need to adopt technology, I certain times ask myself that are we really looking for technology? Or technology is a myopia or a mirage we are chasing? If you ask me, technology already exists in India. Technology is already there in India. I think if you ask me personally, my view would be it's not about finding technology. It's the question is that are we willing to adopt technology? Honestly, that's what my assessment is, that after handling one plant for 9 years, where it has worked continuously 365 days, even during COVID, if a plant like this can be run, why not other plants can do the same thing? And now when I'm talking about my plant, it's not about me. It's about replicating similar plants across the country. Look, we are at a juncture where this sector can go miles. We are already looking at around about, 50 BCM of global biogas and biomethane production. Unfortunately, 80% of that, or majority of that, can be done in economies like India and China. We are at a cusp where we can translate this industry into a mega powerhouse. In India alone, if you see the biomethanization potential or the biogas potential which is there, is equivalent to 160% of my natural gas requirements, which basically means that today, if this entire house is put in order with respect to, CBG, we can meet all our, natural gas requirements out of the country.
I think that's, if I may just interrupt, I think that's the objective of the government as well. The potential is well understood. There's a lot of points that are being made that, there's a lot of support that the government can give. This was a little bit about saying, okay, is there some technology levers that need to come in the picture as well? And do we need support from the government on that as well? We'll come back to you. Maybe, Professor Amit Kumar, anything that you've seen globally that's different, innovative, where technology is playing a key role, and then what can the Indian government do as well?
Yeah. For me, I think the key aspect is that we talk about the conversion and the technology is here. But I agree with the previous speaker in terms of the technology is there. It will improve and continuously improve. The way we should look at this is in terms of, any biogas production or, compressed biogas production. The key component of what is the cost of producing it, the front end in terms of the collection, then you have the conversion, and then you have the utilization. The whole chain needs to be looked into perspective. We talk about conversion technologies here. What about the collection technology itself? I mean, this is a typically water-based technology that we do. Can we do these feedstock transportation through a long-scale pipeline in form of slurries, which will reduce dollar per ton per kilometer cost? Some kind of innovation in terms of the front end. It is also in terms of the end, I would say, so technology conversion, we talked about it, but also at the end, when you are producing CO2, can we take out that CO2? Can that be a CDR technology, which will give you some incentives in terms of carbon dioxide removal? So the whole chain perspective is critical in terms of making this go forward.
So, I really hear you. So I think what you're pointing out is let's not focus just on the conversion. See, at the end of the day, I want to lay the stage a little bit, let's be tighter. At the end of the day, we're saying there's a viability gap funding required. Really, the way to incentivize industry from the government side as well is to make sure that there's going to be continuous improvement, because money is not unlimited. And the question here is, what role does industry see in terms of what role can technology play, and what innovation can you do eventually to bring the gap down as well? Because otherwise there's really no incentive. Vijay, you have more on-the-ground experience. Any thoughts on that?
Thank you so much, and thank you for having us here. We run one CBG plant in Karnataka, and we're setting up 4 more. It's in advanced stage, which will be commissioned maybe in the next 3 months. We'll have 90 tons of gas being generated. I think my whole effort in the next 1 minute is to convince the oil marketing companies, also the government, that what you have done is phenomenal. The policies that you have laid out is very good. We only have to make the right use of it. I'll give you my case, for example. The only mistake that we are doing is we're trying to generalize the whole CBG story. We're trying to put paddy straw, Napier grass, MSW, press mud, spent wash, and we're trying to give a business case that's common for all. Ethanol was a very big success because ethanol, there was a differentiation. There was molasses, there was syrup, in molasses there were 2 kinds. Only because of that differentiation, ethanol was a disruptor. achieved our 10-year goal and 5-year goals. In the same thing, when I consume press mud or when I consume spent wash, I have got 3 products to sell. Adding CO2, I've got 4 products to sell. So that gives me 4 revenues, sources of revenue. Whereas if I do it from paddy straw, I only have 1 source of revenue. And my capex on paddy straw is much higher. So if we understand the unit economics of the business, it is very, very simple. So I echo with what everybody said. There is no technology involved in this. This is basic 10 standard science, if you ask me. It's digestion, it's purification. The only point is, if we try and understand unit economics, LFOM, there's a phenomenal subsidy already given by the government. There is a DPI scheme that is given. There's a CBG, CGD synchronization scheme given. There is a aggregation subsidy given already. We genuinely have everything that we require. We have to simply put all the right levers in the right place and start operating.
Thanks, Vijay. I think that's quite, refreshing to hear. You're saying all the heads are covered. We now need to make sure that there's a differentiated treatment along different levels. Harshit, any thoughts from your side? What do you see across the board from your vantage perspective? What's going on in the world that we can learn from as well?
Thank you. So I'm Harshit Agarwal. I'm Senior Gas Specialist at the World Bank, and we have been partnering with the ministry from the early on and providing technical and financial support, initial grant funding to see how we could support the, very unique policy, as my previous speakers have said. I can't agree more. This is CBG's story, in terms of potential, everybody has known, but in terms of it's also India for the world, I can see that, right? Because it's a very unique opportunity which India has. It's a sustainable gas story, taking India from 6% to 15% of gas. So it'll add on to that. Without adding a lot more, I do see globally it's like, we are always asked, even when we are working in India, what are the lessons from the world to see in India? And there could be many, but I would say that probably the CBG story would be the India for the world. So people say, okay, what was done in India? I could talk more about financial innovations, which other colleagues have talked about. I agree with the panelists before, very well said. We have all the key levers on technology around us. It's about this implementation. It's about these unlocking, these policy behaviors which have been very good, and how do we kind of leverage those to unlock those. And I have some thoughts on financial aspects which I can share, because I do see that there are unlocking to be done on that end. But otherwise, technology, implementation, the partners from OMCs, all of that is really a good story for the world. Really.
Fantastic. I'm just going to take a couple of minutes to get the audience involved very quickly, and I'll make it quick. So is there any thoughts, questions, comments from anyone in the audience? And I'm getting nasty signals, if I would call them that, but let's get it.
Yeah, I'm having the data from the portal, and out of 113 plant running, having capacity of 784 ton, production is only 195 ton. I found the region. What is the region? I got the region of 79 regions of the 79 plant. 18 plant because of the feedstock issue, 23 plant because of maintenance and technology issue, and then ramp up is 24. So I'm combining this under ramp up and technology almost 50%. And every day I'm listening prime entrepreneur brothers, they are coming to me and they are asking that which technology I should adopt. So I want to ask the panelists, they are able to recommend some entrepreneur that if you want to go for the paddy straw, please copy this technology. If you want to go for the press mud, please copy this. If you want to go for the MSW, please copy this.
It's a good point, a good provocative point where we really need to find out all that. Any other thoughts, comments?
Thank you. During the afternoon session, we were discussing, and I was raising the same point, sir, that in this industry, we don't have technological standards or monitoring that whatsoever plant is running and operational as on date, what was the design capacity, what is the operational status as on date, and what all were the challenges during the ramping up of the capacity. So whatever learning, my dear friends sitting here, Vijay has shared something, Rajneesh has shared about MSW, those learnings we all need to adopt and to see that we don't repeat all those troubles or rediscover the wheel. Thank you.
I'm going to take one more comment. We had a hand up earlier, so.
No, I'm just extending that point, what my friend has said there. We should have some certification of these digester or the equipments that this kind of capacity require this kind of digester, and there has to be a certificate that this much yield has to be there. Then only we will be able to have economically viable plants.
Thank you, Mr. We'll just close it with the last comments from.
Few comments. I think the afternoon sessions, I would say there was some kind of pessimism, but this session I'm very optimistic, and everyone said that all the panelists that the technology exists, but then the benchmarking is not there, standards are not there. I think ministry with these stakeholders will get into this also. Secondly, someone mentioned about ethanol ecosystem, which actually we have now reached 20%, that is ethanol, but blending in petrol, but that is actually 1G with lots of energy density for that 1G. 2G ethanol and CBG, I think the pre-treatment, and one goes into fermentation towards ethanol, the other is digestion towards the gas. In some of the plants which we have supported through PMG1, the pre-treatment is an issue, but I was amazed to see that in case of CBG, we have already succeeded in doing that. So maybe there has to be an interface between the 2G plants or the operators of these 2G plants and the entrepreneurs and the CBG entrepreneurs, because I think they've already got over those problems of pre-treatment. Then I think we go ahead with this. The technology benchmarking is the only thing I got from this. And the things are optimistic. Technology does exist, and we'll be the leaders across the world once we have these standards and benchmark. Thank you.
Thank you, Mr. Kanuja. So on that note, with the optimism that the technology does exist, but as a former technologist, I always want to leave a message that says we can always do better. So I leave that to all the private entrepreneurs. Thank you, Mr. Kanuja, and thank you to the panelists for your opinions. I know we've run over time, but if there's any other thoughts and comments, happy to stay over after this outside and collect your inputs. Thank you so much.
We need more stratigraphic wells sponsored by the government. Done.
I think for me, procurement, yes, absolutely, but I think there's also that just real openness, transparency to new business models, and then how can we transfer knowledge easier from outside to inside? So, how do we, just a really boring one, taxation on expatriates. I think there's a real thing there we can do to really transfer knowledge into India quickly and get down the learning curve, inorganically rather than organically.
Fantastic. I think great set of asks. I hope, in the next time we are here, some of those actually come to fruition. Absolutely. Fingers crossed on that. And before I conclude, I think I'll just say that my reflections on the discussion from a policy standpoint, the country has indeed moved the needle. I think there is almost unanimity on that particular aspect. What is now needed is execution. And to make that happen, there are multiple points that have been highlighted, right from the right kind of strategic partnerships to looking at technology in a big way, to looking at integrated planning across the value chain, better coordination between the government and the industry stakeholders. How can we streamline procurement and other processes within the organizations for buying them. A bunch of things that need to be done. None of that is not possible, to be fair. I mean, we've accomplished a lot more and a lot more difficult things in the past. I think it is time for India's upstream sector to rise and shine, and I think this is going to be India's decade, and I am really hoping that we see fantastic results in the years to come. So on that happy note, thank you all for your excellent inputs, and thank you, audience.
Thank you very much.
Welcome to this session. So we are going to deal with how to finance the energy transition in India in particular. And my name is Per Magnus Nysven. I am the chief analyst in Rystad Energy. I'm based in Oslo. And Rystad Energy is a business intelligence firm specializing in the energy sector. Together with me in the panel, I have Katan Hirakan. You are country manager for Société Générale Bank. I would call you an investment banker, but you do many things within banking. And then we have Rohit Gupta. You are head of the energy in DBS.
No, that's
no,
Rajasthan government.
Yeah, Rajasthan RRCL. And that is a kind of authority. So you are dealing with the legal aspects and the planning of the project in Rajasthan, which is the state in India with the most solar panel installed. So
That's right.
yeah, so very relevant. And then we have we have Subahu Kordia in the end here. You are from Edelweiss Alternative, CEO in Edelweiss, and you are dealing with securities, as far as I understand.
Alternatives.
And asset managers, capital asset managers. Yeah. And then from DBS, we have Sanli Weng, and you are dealing a lot with project finance, a lot in India. So it's a very qualified and senior panel. I think I will start with you, Katan. We have seen technology costs is coming down. Solar panel modules is down, everything is down, batteries come down. And the tariffs, electricity tariff is coming down. What do you think is driving this? Is this technology or is actually finance a part of why the tariffs are coming down?
Yeah, good afternoon, everybody. Thanks for the question. Clearly, as you already alluded to, technology costs have come down extremely significantly in the areas you mentioned. Solar modules, wind turbine, we've seen storage costs come down, a lot. Yet we're still seeing, certainly in a lot of the projects that the government are bidding, the playing field is very competitive. The tariffs being achieved are eye-wateringly low in some cases. So clearly, under a broad banner of financial optimization, a lot has been possible. And broadly, we sort of look, you'd look at two things, right? Firstly is the cost of capital for that particular company, that particular developer. Second thing will be the sort of leverage that can be achieved in order to enhance equity returns and help put the developer in a position to bid very competitively. So we've really seen that a lot of the sort of juice, probably in the last year and a half, has come from the fact that the financing market has been very, very supportive. And I'll talk about it a little bit later as well. It's not just sort of traditional project finance. There have been other ways to lever up equity investments, which I think has actively happened in India. There's a lot of financial engineering that can happen sort of beyond the traditional project level, project SPV level as well. So like I said, I can come back to that. But I think the market has been very responsive. You've had domestic banks who have been very strong, but I think with the way regulations have evolved in areas both in terms of domestic financing, but also external commercial borrowing, that has really facilitated a larger entry of foreign banks into India. It's an asset class that they're comfortable with as well in terms of the development and the construction risk and then moving obviously into the operational life cycle as well. So it's played a big part. I'm happy to come back to talk about the various components of that a little bit later. But financial optimization, in our view, will continue to play a role in ensuring these tariffs are as competitive as possible.
So when we do LCOE calculations, where should we put the cost of capital, just from very broadly speaking?
Yeah, you can't say that because it depends obviously company to company, right? But I think a lot of people are looking to, these days it's more equity returns they're trying to achieve sort of in the teens. So I think you're looking at generally a double-digit number, apart from a few companies that have they can have very explicit state support, which allows them to borrow money domestically more, competitively. So you can't really land it at one number.
No. Okay, that was a good answer. I have to consider that it's a double digit for the equity side, and then it's quite leveraged, right? So the WACC is relatively low still, right? Yeah. And Rohit, in Rajasthan, you also have a net zero target in Rajasthan, and it requires a lot of financing to get there. So how do you finance the project in Rajasthan?
Thanks for the question. I think it really depends on the kind of project you are thinking of. So just to talk about numbers, we have about 42 gigawatt plus of installed renewable energy capacity, but about half of which is for the consumption of the state and half of which flows outside for the rest of the states and the country. So that really depends who's the off-taker, and the financing model works on that. But if going forward, if you look, the state has a target of installing about 125 gigawatt of renewable energy in the next 5 years, 10 gigawatt of storage, which is pump storage as well as battery storage, and then the associated the transmission infrastructure and the associated grid modernization efforts. We also have a large target of distributed renewable energy projects, which is currently we are about 10 gigawatt and we plan to add 5 gigawatt more. Now, so all these projects have a very different kind of financing model. So for example, for big projects, we look for development financial institutions, DFIs, ADB or World Bank, we work with them. So currently we are working with ADB for the grid modernization project in the state. But then you also do public-private partnerships. So big renewable energy generation projects, they are mostly on the public-private partnership basis where we provide land and, it's a private entity which brings in the financing. And then we also have the state corporations like, the state transmission company, the state generating company, or we as the solar park developers, the RREC and RSDCL. So here we are also thinking of exploring the financial markets. So for example, we are planning to roll out an INVIT for the state transmission infrastructure. And on the solar park development side, we are also, we have engaged a financial company to sort of, plan for going for equity market. So it's a whole range of, it's a whole suite of financial arrangements.
How many $1 billion are we talking about in Rajasthan only that goes into renewables and energy transition, or maybe only solar? It's a double-digit $1 billion number, I would guess.
Yes. So just to give you an idea, we are currently building a solar park. The bid is already on, which is about 2.5 gigawatt of renewable with 6.5 gigawatt of battery storage. The investment in that project itself is about $2 billion. So we have worked out some numbers. So if we have to meet our renewable energy targets and the pump storage targets, which I mentioned earlier, the number works out to about $70 to $80 billion. And that's that's the kind of infrastructure we need. But, and you would be happy to know that in the last 1 year, we have seen about the grounding of about 5 lakh crore, which I think is a substantially good number of the projects which have been grounded, which includes nuclear battery storage as well as solar.
Yeah.
So
I can add some number, global number, because 2025, it was installed 530 gigawatt solar panels, and that was something like $450 billion. So you need to count in average 85 cents per watt installed in solar panels without batteries. And what is happening now is that you get more and more batteries. So I think that about in all the awarded solar panel projects in 25, it was distributed batteries included. So that's the way it's going, isn't it?
yeah, it is. So we have about 6 gigawatt hour of standalone battery storage projects already under execution, which is apart from the 6.5 gigawatt hour of battery storage in the solar park, which I mentioned. And now we are also planning to come up with a project of distributed battery storage, because you have all this distributed renewable energy flowing into the grid, and of late the challenge has been to balance that energy with the energy flowing from the large utility scale solar projects.
Yeah.
So you are right, as we go forward, a lot of fund will go in, a lot of money will be needed for battery storage.
Interesting market.
Yeah.
We sang.
Yes.
Can you be honest about the profitability and the returns on projects? Has it been good in the past, and what do you see going forward?
Typically, this is not unique to India. If you look at other countries, Japan, the implementation of renewable projects in particular, usually if you're in wave 1 or wave 2, the returns are obviously attractive, largely because of feed-in tariff regimes or other mechanisms that governments use or state agencies use to reach to accelerate the tipping point, right, for economies of scale to kick in. So generally, renewables has seen a steady form of infrastructure-like returns. It's just that I think it appears that the temperature or the excitement around that asset class has cooled down somewhat recently. I think it has gotten more realistic. I don't think it could have been a bit more euphoric in the past, where people expected it not just to be infrastructure-like, but also possibly a multiple play, where upon exit, they make X times MOIC and all that. But like Kotan said just now, we continue to see that well-structured projects, especially on the development side of things, in most countries, including India, what we're seeing is you can get, if you shape it right, mid to high teens on the development side. Obviously, on the operating side, you'll be looking at a lot more like low teens or high single, right? Depending on also your investment currency. Obviously, if it's the US dollars that you're pegging it to, then you've got to factor in the rupee depreciation. So generally, you see the maturation of the whole ecosystem of capital providers coming into places like India, because obviously the developers, the strategics, they would want that development premium, but the sovereign wealth funds and the pension funds, because there's so much to deploy, they are looking for a lot more fixed income-like returns, for which a deep market like India does present opportunities.
That was better returns than I expected to hear. So it's very promising for energy transition that you can actually get up to
We
meet the
can talk about challenges
double-digit
later,
returns.
yeah, but I'll start with I'll start with a promising outlook for now.
Very good. And Subahu, you are CEO of Edelweiss Alternatives. And that is more public securities and capital asset management, if I understand that right. Could you say a little about the kind of macro environment and the power demand increase in India? I think we are at around 2,000 terawatt hours as we speak, and it has the potential to double in 20, 25 years if our numbers are realistic. Do you agree with those numbers? And what is driving this extreme growth of power demand going forward in India?
Yeah. So I think we look at energy as one of the mega trends in India, right? And our belief is, and we do a lot of investment in energy sector, but our belief is that the India energy demand grows by about 7% on an annual basis, whereas the world energy demand grows at about 3 to 4%, right? With the base, what you just talked about, that means the incremental demand of energy is significant. And that cannot be just met out of renewable power. Renewable power will be a significant source of that energy demand to be met. Saying that, we have about 250, 300 million population, right? The number of people who are getting added to the population, which is an expectation by 2035. So there will be an increase in demand. There is a digitization happening in India, which is also increasing demand, data centers and digital. There is also the increase in the income, right? Middle class, the income is increasing, and that is also will lead to an increase in the demand of energy. So overall, from a demand perspective, the market looks quite exciting. And sometime I take back this analogy to US, which was in 1987-88, was about $4 trillion economy, and the average age of population of the same of India today. Right? Yeah. So what we have seen out there, and US is a service economy, right? Largely. India is the same. 65% of our GDP is service economy, but we are adding manufacturing. So directionally, we will see the similar amount of, or the same trend, what happened in US since 1987-88 till now.
And this 7%, what's the time horizon that we can see so high increase?
So this 7% plus has been there for a very, very long time in India. Yeah. It almost matches closer to what is India's GDP growth, right? And that is how electricity demand elasticity is linked to the GDP growth. So India has been doubling GDP every 6, 7, 8 years. Right, on a PPP basis, the energy demand has been growing at 7% or 6% to 8, 9%. If you take data for last 5 years, 10 year, 15 year, 20 year. So that is expected to continue with the growth in India's GDP, the growth in the population, the growth in the middle class, and the consumption.
Yeah. And power in particular, I said that it can double. What do you think about that number?
Sorry, can you repeat
I said that the power, the electricity demand in India can double over 20 years. Is that possible, or is it realistic, or do you have any idea?
If you put 7% growth over, let's say, over 10 years on a compounding basis, my view is that it should double in next 10, 12 years and not 20 years.
Okay, right? So maybe I thought that our forecast
and that is what has been happening. If you look at historically, the energy demand in India has been doubling every 12 odd years on an average. Right, so I expect the trend to continue. With data center and EV infrastructure, which is where India is also investing a lot, and manufacturing, which is a focus for import substitution and the PLI scheme that the government has. I will not be surprised that if the growth happens much faster.
Okay, let's take a new round. Katan, you have been involved in LNG, I think. What do you think about that LNG market?
Thank you. You mean sort of interplay with renewables?
Yes, in a kind of longer term, because I personally, I am a kind of, I think that the LNG market is going to grow, but for the short term, mid term, it's a little oversupply, but in the long run, I think it's. But do you have any ideas about when will this market tighten and?
Yes, so I think we're sort of, I mean, for as long as I was involved in that market, it's always been quite cyclical, mainly because supply comes on in such large chunks, and then clearly, even though you'll have contracted offtake in many instances, the ramp up takes time. The uncontracted part obviously has to be sold, and I think if you look, if you look at the global market, there's a very significant component now, and more than 40%, I think, that is sold on a either a kind of anything from medium term to short term to spot volumes, right? So that market very much aided by the aggregators who came in and basically said, we'll take the risk and we'll warehouse volumes until various markets develop. That changed the market. Obviously, the shale evolution in the US, that's really important because that fundamentally changed the way LNG was going to be produced and the way it was going to be, bought and sold. Now, if you kind of fast forward to today, clearly, Asia Pacific is still one of the key anchor markets. Europe has had obviously a tough time with the war, situation and having to, import more LNG from places like, the US. So look, I think there will continue to be a degree of cyclicality, and if you think about what's coming online, kind of this year and next, from a combination of Qatar, US, and then there's a couple of very big projects in Canada. If all of that comes online, as forecast, then I think post 2027, again, we'll be in a very buyer-friendly market. And what I always predicted, I don't think it happened at the pace it has, and actually recently with all of the with the situation unfolding the way it is in the US and people clearly putting more focus back on gas development, more LNG projects. But I thought there'd be more of a sort of short to medium term market developing. So by that, I would mean sort of maybe 3 to 15 year type market. And that is there. As I said, you've still got a significant component of the market that is there. But we've seen buyers continue to underpin 20-year contracts. So all of these, if you've got a 2050 net zero target, then, you're very, very close to the cusp, of that. Clearly, one of the game changers is how all of this LNG is going to get developed, likely in conjunction with more carbon capture and underground storage as well, right? And I think there are several projects that are doing that. The economics of that still have to work out. So I still feel the jury's a little bit out. But it's clear that LNG will continue to play somewhat of a base load role in power.
For a very long time?
Well, I think the other dynamic is that countries like in Asia, you've got countries like Malaysia, Indonesia, that were historically big exporters of LNG, who have now turned into, importing the product, as well. So some of it will clearly still underpin for a sustained period of time. And like I say, recent evidence has shown people still signing up, on a long-term basis. I guess the thesis that everyone was talking about is, the LNG interplay with renewables and sort of addressing the intermittency. Although I think don't overlook the development in India, right? Because India has got very far along the process of being able to provide round-the-clock power, right? So by combining, solar, wind, and battery storage, or in some cases pumped hydro storage, they really have developed these solutions very, very fast. So, is that thesis still completely valid? I think there's still a question mark on that. But again, if I come back, that's why I talked about the US evolution, is that LNG is obviously, with Henry Hub, where it's been for a while, you know, if that stays low, then clearly sourcing LNG from the US is competitive. Plus, there remains a huge pricing arbitrage because of the inherent flexibility of being able to buy out of the US. And I think whilst the Qataris obviously want to maintain their very, very significant market share, I think they are also more receptive to having sort of more flexible contracting structures as well. So you're pushing me in a way in terms of the runway for LNG. It still looks quite significant. But, you know, will it be done in conjunction, you know, with more carbon capture? That's one of the things we'll have to see, and how much buyers attach importance to, you know, sort of burnishing, if you like, you know, the green credentials. I think all of these will play factors.
By the way, the Henry Hub is above 6 as we speak because of the winter storm, and there has been a crunch of the gas supply. So that is going to impact the LNG prices as well. Rohit, you have a good overview of all kind of how projects are financed. Private investments is of course very important. How do you attract private investments, and how do they perceive the risks in renewable projects?
Right. Thanks. I think for attracting the private investments, you really need to first establish the brand. Investors need to be, you know, they first need to know about the investment opportunities which are available in the state. So we have been trying to do a lot of outreach events. Last year, we organized a mega global investment summit, which was inaugurated by an Honorable Prime Minister himself. And during that event, in the run-up to that event, we saw a large number of MOUs, signed in the energy sector itself. So something to the tune of about 30 lakh crores. So that's a huge number. But the question which I think is more important again is that how do you make sure that the risks are being covered? And if you look at the energy sector today, you can divide the risk into broadly three different categories. One is the operational risk of the project itself. So whether the developer will be able to get the land, whether there is a connectivity available, how fast the transmission infrastructure can be constructed. And we have been working a lot on that. The state has been very proactive in resolving right-of-way issues. We have been very proactive in providing land to the interested developers, so much so that we have also tweaked our policies to make it more easy. And also, then the State Solar Development Corporation is acquiring the land and then setting up the civil and electrical infra so that the developers can just come and plug and play their projects. So that's one part. And then the second is the off-taker who will take that project. And before we came on stage, we were all talking that there are so many bids which are there in the country, but they are finding it difficult to get the off-taker. And so we are trying to mitigate that. So the recent solar park project being the one example where we are procuring the power so that the off-taker risk is zero. And similarly for the other projects which are coming up in the state, we try to make sure that the offtake is assured, and alongside the offtake is the financial credibility that the payments will be made on time. So we have the payment security mechanisms, not just LC, but also setting up dedicated payment security funds. So some of the projects which we have done on different financing models like hybrid annuity models, we have even set up dedicated escrow funds so that, we park the money in there so that the developers can see that this is the money which will be used only for making those payments. And then I think are the broader issues which are related to the supply chain. And that's where a lot of focus is on establishing the domestic manufacturing industry. So just recently I visited one of the battery storage assembly units which has come up recently in the capital city of Rajasthan. But right now, most of these components are, for example, getting imported from our neighboring country. So I think going forward, there's a lot of focus which Government of India and also the state government has so that supply chain risk is minimized, and we are providing special incentives to the manufacturing industry as well to set up the module, battery, cell manufacturing plants in the state.
Yeah. It's good that you mentioned manufacturing because it's quite potential for manufacturing in India, and I think that already you are manufacturing much more than you consume on solar panels. You actually export quite a lot of solar panels and even solar cells, but the wafers are coming from China still. Right?
Yes,
yeah.
the
but we have to
wafers
pass on to
sure.
because. I would like to know where this capital is going to be sourced from, whether it's India, rest of Asia, Europe, and America, and the amount of capital. If India is going to double energy demand and decarbonize at the same time, the capital we are talking about trillions of dollars, right, in a couple of decades from now. So, where is that source, all this capital?
Okay, thanks for that question. Per. I think what's been successful for India in terms of attracting investments have been what we've seen elsewhere as well, where especially for long-dated infrastructure projects, I would just put it succinctly as 3 C's, right? The first C is obviously the commercial drivers must be there, especially for infrastructure projects, meaning that there is a real supply-demand gap that can be economically filled by the private sector. I think that's quite key, right? And in India, obviously, there exists that gap because of on the demand side, obviously, a burgeoning middle class. My colleague spoke about how power demand is increasing, et cetera, et cetera. The industrialization of India, made in India, turbocharged by the AI demand now, as well as geopolitics. And then on the supply side of things, yeah, that domestic supply chain that's increasingly being assembled more on the module side, but also increasingly on the cell and further upstream. And the country is just also naturally well endowed with especially rich solar resources. And although other countries, including mine, have rich solar resources, it's not just, you can't just have one duck in a row, you need 3. And so you have rich solar resources, you have land, right? Asia Pacific next to Australia, you probably have the next big piece of land that can deploy these renewable projects. And then the third one, obviously, is the track record, right? Which I think the country obviously has exceeded its target of getting 50% non-fossil fuel ahead of time, right? So these drivers, commercial drivers, that's the first C. The second C is obviously contractual arrangements, right? For any long infrastructure projects, especially foreign investors like us, we want to see a place that has contractual arrangements that are sensibly allocating risk to the right parties, and obviously also a regime that respects contracts. Yep. And India ticks the box on both these things, especially the arrangements around SECI being the off-taker on a lot of these projects. That's been a game changer, as we were talking to some of my colleagues.
I see the time.
And then the third...
The time is, we have to leave the space.
Yeah, very quickly. The third C, obviously, is counterparty, right? Anything multiplied by 0 is 0. So obviously, whoever signs these off-take agreements or these contractual arrangements must be a credible. I think that if you get these 3 aligned, the future is bright.
Yeah, we didn't get to hydrogen, but that will take a little time. But maybe it's just as good that we didn't get to hydrogen this year. We will come back to that later. Is that okay? Yeah. Okay. Thank you. Thank you. Great discussions. Thank you so much.
Thank you very much.
Thank you.
Hello and welcome to the evening session here in India Energy Week and the Resilience Pavilion. Topic today for us is to discuss India's petrochemical opportunity, turning domestic strength into global leadership. A very quick introduction. My name is Sudeep Maheshwari. I'm a partner with Carney, a global management consulting firm. With me, we have Leon de Bruyn, who's the president and CEO of Lamas, Mr. H. Shankar, who is the chairman and managing director for CPCL, Mr. Bhartan, who heads the director refinery for HPCL. Warm welcome to all of you. It's a very interesting period. I've been, tracking this petrochemical market for more than a decade, and we have been professing all our clients, especially the refinery, owners, to get into petrochemical, and we see a lot of activity. But what has really changed in last couple of years is there's a significant overcapacity in the global market, and which is completely changing the dynamics of the petrochemical industry. So it's a very interesting period. I mean, on the one hand, there's a global overcapacity, rationalization that is happening. At the same time, if we look at India's demand, it's pretty robust. And so that's where I guess a lot of discussion will happen. Given this market situation, a dichotomy of sorts, how should India navigate? And should it be about self-sufficiency in petrochemicals from here, or is there really an opportunity for India to become a manufacturing leader? So that's the topic for today. What we will do is to start with, to my fellow panelists, I want your view on one question, and I want view from all of you. Short 1 minute, then we'll dive deep into some of the other questions. Okay, Leon, I'll start with you since you're next to me. From an India's point of view, where do you think, what is the single most biggest strategic shift, especially if we take a 2030, 2035 timeline that India should really think about if we have to, be a powerhouse in petrochemicals?
So yesterday we heard in the opening speeches some consistent messaging. India is the fastest growing energy platform relative to any other country in the world. And that presents with opportunities and needs. And we have to make sure we support that with better, more reliable, more efficient, and more profitable technologies to make the most out of the imported crude oil and gas that India consumes. More and better technologies that are deployed to convert these valuable streams into higher value products that are in higher and growing demand in India. And we have to figure out together how we can maximize this conversion in the most sustainable way and also in the most profitable way so that we create enough momentum to keep growing this way.
Thanks, Leon. Mr. Shankar, same question to you from your vantage point.
Yeah, from continuing with what my fellow panelists have told, I think the shift that is very important for us now at this point of time is to see that just as we are expanding our refining capacities, we are going global, and we are going to be a kind of global power center for the refining industry. I think we need to take a shift and move towards the petrochemical, also build capacities, try to diversify, build more petrochemical intensity index in the existing plants, and plan the new projects with the higher integration of petrochemicals and become a global hub for the capacities and the volumes with respect to the overall petrochemical demand that we are seeing rising daily. So I have a feeling that the major shift that should happen is in building more capacities in petrochemical plants.
Mr. Bhartan, your views?
Yeah, good evening. Good evening to the panelists and the select few audience who are there with us. About 5 years back, it was projected that India should have one cracker built every 5 years, and we thought we will make 7 to 8 crackers. We did commission one in Bathinda, another one in Barmer will get commissioned this year. Bina is getting constructed. Beyond that, what is the question? I think we should not lose the momentum. We should see means and ways of how do we sustain. This is where innovation in the form of feedstock and technology will come in. That is what we should concentrate.
Thank you, Mr. Bhartan. Just taking this discussion forward, and my next question is to you, Mr. Shankar. I mean, CPCL, you have been in middle of a project conceptualization. You have pivoted it from a fuel-centric refinery to now more towards petrochemicals.
If you can talk about that, how the shift is helping economics, if at all, and how does it helps in the India's overall petrochemical supply-demand gap?
Yeah. See, CPCL, if you remember that around 2017, we had the huge plans of going for a 9 million metric ton refinery at Nagapattinam, down south in Tamil Nadu. That we had done an entire study and we wanted to build it in two phases. The phase one involved building the fuel systems, and then the phase two was planned to go into the petrochemical sector. So that was a phase-wise integration in moving from the fuel side to the petrochemical side. But while we were doing the assessment of the financial returns, if you look at the IRR and other concepts, a fuel-based refinery on its own, it cannot be sustained on a financial terms, on an economic scale of 9 million metric tons. So we had to relook at the whole thing because we thought if we are able to directly move into the phase two position of the project, instead of graduating phase-wise over a period of 5 to 7 years, we took a look at it. We went back into the drawing boards and we started working on the concept. And we saw that if we are able to move into a cracker area, like what Mr. Bardhan was saying, every 5 years you need a cracker. So what next? So we thought the next good idea would be having a cracker in Tamil Nadu, because Tamil Nadu is really doesn't have any cracker of its own. So we looked at various ideas of maybe looking at naphtha cracker or some other streams. But then finally we could look at a cost-based solution so that we don't build too much of capex into the project. So we worked it out, and then we have, you can say, done a stage one, you can say around 30-40% of the costing. If you say plus minus 40%, we found that ethane cracker would be a good proposal there, because the ecosystem is very good in the Nagapattinam region. We have a very good and running port out there and good rail and road connectivity. So considering the import requirement of the feedstocks and also the evacuation of the products, that area is very well suited to have a large cracker. And that is what the state of Tamil Nadu is also starving for. So we are trying to build a kind of a project proposal at this point of time, because land we have already acquired and we have a good parcel of land. So we are looking at the ethane cracker as one of the major projects that we can build in Nagapattinam. And we are also studying what are the economics, how we can build with the state government support, how we can move forward and put this in motion. So we can say that right now, although we have a plus minus 40 level of configuration available with us, also we are talking to the government of state government of Tamil Nadu for to see how this whole package can be incentivized. So that's where, and it really gives you a good returns also, because when yesterday I was talking to some of the industry leaders, they say that a petrochemical intensity of around 35-40% is what we should look at as a minimum, and the IRR should not be in the range of 10-12 that we normally talk about. We have to look at something like 25-30. That is what the new rule is in the market. So looking at it from various perspectives, how to build the very efficient and very profitable model. That's what is the plan now.
25-30 is very ambitious.
Yeah.
I hope for the best.
I know, but that's what the market talks about,
Leon, coming to you and your opening note, you mentioned, right, technologies, and you are seeing around the world as CEO of Lamas. Are we on the right path in India as far as technologies? What should we be thinking about, especially for next 5-10 years?
Yeah, so the breadth and the depth of the demand for advanced materials and energy products in India demands that we have to think beyond just the conventional process technologies. We have to start thinking of an integrative approach of all technologies, process technologies, digital technologies, better catalyst technologies, equipment technologies, and whatnot. And it's very encouraging when you look at the innovation state in India. The R&D by the government companies is phenomenal, and I know my gentleman on my left would agree with that. And so I look at the opportunity of combining all that innovation with an infrastructure and a partnership between private companies, public companies, and the government to make sure that the right policies are in place to allow an expansion of the hydrocarbon industry in a prudent manner, and then with the right investments. And of course, Mr. Shankar highlighted that there has to be the healthy return on investment, because these are investments for the long run, and these are massive investments. These require to deploy the best of the best and also have the return to support that. So when we look at Lummus Technologies' role, we want to support this energy transformation in addition, as Mr. Sultan Al-Jaber mentioned yesterday, to the best possible. I would say India doesn't just embrace the energy needs and the transition. India is leading and shaping the energy space, and it's a blessing for Lummus Technology to be a partner to many companies in India to do that.
Thank you, Leon. Mr. Burton, coming to you, and Badmir will soon come online. I mean, it's a very difficult market if we see, at least in our view, next few years. There's a rationalization of capacity happening, both on refinery side and also on petrochemical. In such a scenario, I mean, what's your view? Where we should be? What operational capability? How should we be running our refinery and petrochemical to, really be economically viable?
Right. So we are definitely going to start in a period where the price is really low, and looking forward, we don't know, 2, 3, 4. It's anybody's guess when it will go up. But the blessing in disguise is this refinery is integrated in such a well-knitted manner with the refineries. Each and every stream is actually valorized properly, and molecular valorization will bring in lower cost of operation. That is one advantage. Definitely we have kept it in the design, and in actual also we must be able to do. The second blessing in disguise is actually the fuel cracks are quite good, and we are looking at fuels from this refinery also, though the petrochemical intensity index is as high as 26%, which is highest, going to be the first highest in India. It's ironical that fuel is going to subsidize petrochemicals in these initial days, and in the coming days we hope, as the prices improve, we will be able to catch up and then go for the next expansion plan. Having said that, I feel we'll have to add one more. We should not treat polyethylene and polypropylene like a simple commodity. We'll have to add value to that, bring some engineering solution to that, which are the other main class of importing that is taking place today. Today, two major class of products are being imported. One is the plain vanilla commodity polyethylene, polypropylene. Second is the engineered product. We will have to look at the engineered product if we want to have more value.
So if I may add, so what Mr. Bartleman just said is extremely important. Yes, there is overcapacity in certain products, but there's also a dire need for certain higher value products. And I think the capacity that has been built up in India had served a very important basic need, but we can go into more specific high value products where there is no overcapacity, and this way deal with the market situation in a profitable manner.
Got it. Got it. Very interesting. The next set of question, I would want view from each of you on the same question. One of the question that I'm increasingly picking up these days, given the market scenario and challenging economics for new projects, is should India be even looking to produce domestically? And the argument that is given is, hey, why not go to a Middle East where feedstock is cheaper, build those capacities there and bring the product, or, sign free trade agreements and get the products from there. Again, I would like each of you to opine on that. I mean, is that strategically the right direction? Are we missing something? Would be good to know. So maybe, Leon, if you want to get started, and then we'll go in the order.
I believe India is on the right track. India is slated to become the powerhouse in petrochemical production. But a few things have to happen. One, we have to broaden our thought around feedstock. We shouldn't just rely on the traditional feedstocks. We should broaden it, because the import of crude and gas is growing, and there's trade balance issues by just keep growing that without some smart solutions. So we talked, Mr. Shankar mentioned the need for higher efficiency. There's a lot of innovative solutions to have a better use of these imported crudes and hydrocarbons. But after the importation, we make advanced materials like polyethylene and other polymer products and other advanced materials, it's crucial to keep those hydrocarbons in circulation. To say it very bluntly, we make plastics and then we dispose of it. Plastic is too valuable to throw away. These are high-value hydrocarbons that in smart ways can be kept in circulation. So if we figure out how to keep the hydrocarbons in circulation, we can help satisfy the thirst for more consumer products and industrial products without a proportional increase of import. We also have other opportunities to take biomass and other feedstocks alongside with the traditional feedstocks. So that is number one that I think must happen. Number two, we need to consider India as a potential export hub for petrochemicals, because that shifts the mindset to a larger opportunity. And I think with the domestic demand and the relatively efficient capital deployment in India, you can outcompete the places where, yes, feedstock may be inexpensive, but the capital deployment efficiency is much worse. So I think that is a second advantage that India has. And third, with the vast available existing infrastructure, you can capitalize on that by having much more integration and, again, better use of your feedstocks to maximize the high-value products and minimize the production of less valuable products. And you know that Lammers has the crude to chemicals, which is one beautiful solution. But there's many more solutions to achieve this. And like I mentioned in my opening statement, we need to find an integration of digital and process and catalyst and equipment solutions to get to smarter outcomes. And then the last point that I think is crucial is we have to have the right policies and government mandates to keep expanding in these various directions so that we can make sure that India is on this track of becoming this global powerhouse also for export. This is my vision.
Thank you, Leon. Mr. Shankar, same question to you. Should we be making here or should we just buy from outside or go build outside?
No, this, from my point of view, I say this is a very important decision whether to make or buy. This is the kind of decision that everybody takes in our industry on a day-to-day basis also. And we have looked at this option of make or buy. And then I'll give you one very beautiful example about how this CPCL's ecosystem runs. We are a 60-year-old refinery and a standalone refinery. And at the same time, if you look at our petrochemical intensity index, which is very important from profitability point of view, you would say, but we have never believed that the entire range of products will come out from the refinery. Around 80s, 90s ecosystem developed in the Chennai, Manali area, our refinery area, where we acted as a mother industry for various petrochemical downstream refiners, the petrochemical plants which came up there. So a beautiful ecosystem has been developed in this region, and we give the petrochemical feedstocks to them, and after the value is realized at their end, the return streams come back to us. So that kind of a collaborative way of working is taking place in Manali area. And needless to say, we believe very firmly that you have to develop a proper ecosystem there wherein the maximum value can be achieved by collaboration and by working together. Whatever is good for the nation that comes out from that area. So when even the government of India is working towards making many petrochemical parks where there is a proper integration of the feedstock, there is a ready consumer available across the street. So these kind of benefits you will get only when you bring in the feedstock and do a value addition at our end. So what I personally feel is that taking this very successful model of how CPCL operates in its region, I have a very strong feeling that we should definitely bring the feedstock and then do proper value addition at each level. And then subsequently at the downstream level also value addition occurs. And in that scenario, what happens is there is a very strong bonding that takes place, that the streams get properly valorized. That is the most important part that comes out of it. So I have a strong feeling that this is a very successful model, and we have demonstrated it and running like this for last 60 years. And with this model in place, we can only replicate it in a larger size. and also look at ready consumers available for you. For example, if we are building a, say, PDH plant we are making, then there are people in our Mandali area who can definitely be a part of the entire project. So we are looking at some joint venture kind of an arrangement where the feedstock and the products keep exchanging across the street and across through pipeline network. So that gives a maximum value to the system, and the capex also can be shared equally, and there is a lot of potential available to improve the entire region by going on a manufacturing process instead of buying and importing the whole substance, because it also adds to reliability. Otherwise your feedstock reliability also is broken. You don't have any proper control on the market. The capex also, you are funding somebody else's capex to bring the products in. So it's an ultimately, if you look at a win-win situation, the best thing is to produce at our plant so that the entire environment also grows along with it.
Thank you, Mr. Shankar. Mr. Bartan, your thoughts on this?
See, we moved from make for India to make for the world several years, at least quite a few years back. The stated policy of government is stop import, self-sufficiency, and Atmanirbhar and whatever Viksit Bharat dreams we are having. To achieve that, there is no second question that we should not do. We should do here only. Mr. Shankar has put it very nicely that how the ecosystem has grown around Manali when they came and started introducing some of the petrochemical feedstock when they gave. At least 4 to 5 industries are today thriving there, which is actually helping India in several ways. Two ways we'll have to see this. One is as a government company, definitely we'll follow the stated policies of the government. If you just look at Barmer, it was a deserted desert few years back. Today is no more. If you just come to that place, see the district, the economic activity, even before our production started, is very, very huge. The entire the sleepy village has become a very prosperous town, and in the coming days, it's only going to grow. For that to happen, we will have to make in India. Now, there is a question is there. What if somebody does at a very cheap price and then comes and dumps here? Then why are we following this torturous route? That's true. The question is true. This is where technocrats, business, entrepreneurs, all have to come and then provide a solution to this. Mr. Leon has very nicely put it. Look at recycling. Look at distressed feedstock. See that your cost of production, cost of feedstock comes down and survive and produce in this highly competitive market. We'll have to look at that. We'll have to look at, going back to my initial opening remarks, again, standard feedstock and technology to achieve this. So the onus is on us, and we'll have to do that.
Thank you, Mr. Bartan. You made a very important point. I mean, the stated policy is not just Atmanirbhar, but also look at exports. Realistically, where can India really build the leadership beyond commodity petrochemicals? And maybe if I can again, Leon, start with you.
So several areas. So besides the petrochemical basin, that is, in my opinion, an opportunity for export, as I mentioned earlier. There's 3 key areas where I think there's a growing potential in India. Number 1 is crude to chemicals. The crude import is obviously very significant in India, and the infrastructure is there, but the growth of petrochemicals in the long run will outpace crude consumption for production of refined fuels in the long run. And I know there's a current market tensions, but when you have a vision for 2040 and beyond, you have to think of the long term. And this is where crude to chemicals can be a highly efficient conversion of crude to petrochemicals, maximum yield, or also co-produce some diesel and or gasoline as you desire. This has shown in Korea to be a highly efficient path, and with the domestic consumption growth in India, I think the right recipe is, economic recipe is in the long run for crude to chemicals here. Second is ethanol. India is one of the top 3 countries in the world in production of ethanol, together with Brazil and the United States. Ethanol, of course, is highly added into gasoline, and in India, I believe it's now close to 20%, if I'm not mistaken.
That's right.
Which is great, but I think much more can be done with ethanol. Ethanol can be a petrochemical building block to make any molecule. You can convert ethanol profitably to ethylene, and then from ethylene you can make any molecule. So we have a technology to convert ethanol in a few steps into SAF, sustainable aviation fuel. For example, we have a technology to convert ethanol in a few steps to polypropylene and polyethylene. So this is a fantastic opportunity for India, which does not depend on imports. And it can create an opportunity for export because the world is looking for more sustainable aviation fuel and green polymers. So I think this is a great opportunity in India, and Lammers is actively pushing for this ethanol to SAF technology in India. And then third is waste conversion into value. I know waste is not sexy to talk about, but when you think about the opportunity you have to convert waste into valuable products, you address three things. One, the circularity of keeping hydrocarbons in the industry instead of disposing of it, reducing import reliance in relative terms. Second, you actually solve a big problem of waste that is not used anyway. And third, you make valuable products in a sustainable manner. So let me give you two examples of what we have been working on and where I think India can profit and benefit. We have a technology in partnership with Innovent to take waste tires. Globally, there's more than 1 billion tires wasted each year. I'm sure in India it's a large number of tires. I didn't track, but I'm sure it's in the hundreds of millions. So if we can convert those waste tires to carbon black, to steel, to pyrolysis oils, which can be fed back into the petrochemical sites, you have a clear case, and we can. That's our technology. And second example I want to give is to convert waste plastic into valuable products. There's so much plastics produced, and again, if we can recirculate the hydrocarbons in smart ways, we can achieve the three objectives I just stated. And again, we have technologies in small scale or larger scale that can be either distributed in small communities where you don't need long distance logistics. You can actually locally collect the waste plastic, convert it into valuable hydrocarbons, and consume those hydrocarbons again locally. So beautiful examples of what I think are opportunities in India. Crude to chemicals, where Lammers is the #1 technology developer in the world. Ethanol-based production of sustainable aviation fuel or polymers. And third, conversion of waste like rubber tires and plastics into high-value products.
Thank you, Leon. Going to you, Mr. Shankar, again, which places, which areas where we think we can build, not just for India, but for the world?
Yeah. There is a good report of Niti Aayog, I think 2023 report. It highlights two important things. One is that it says that by 2020, 30 or 32, the specialty chemicals we should be the net exporter. That is what it predicts. So figures show that the specialty chemicals we should be the net exporter by 2030, 32. That is the range. And coming to the petrochemicals, there is still a gap that is there. There is almost more than 50-60% of the gap that needs to be bridged. So I feel that if we are able to make a good impact on the specialty chemicals to continue this journey, that would be one area where we could be a net exporter in reality. That is one area. Secondly, the petrochemicals offers a very huge opportunity for the entire nation to build some, this is the right time to actually invest. If you see the downtrend that is continuing, it is only a matter of time before the petrochemicals, the pricing also improves and the profitability also comes in. So as the saying goes, like it is better to invest at this time, and so that by the time you are seeing the peak, you are up and running with the new projects. So that is where the real investments are required, and with a good support from the government in these areas, because the capex is quite large. We are looking at almost a 10 billion kind of a project to begin with when we talk about petrochemicals. So we need really huge capex to come in, and we need to have a good support over a long period of time from the government to keep this project running. Because whenever we do such big projects, multi-crore projects, when we do in our area, there is a huge multiplier effect which comes around the entire region. So that also adds a lot of, like what Mr. Bardhan was saying, which Barmer is is a good example. If you look at all the Indian oil refineries, if you look at our own Manali refinery, when we started 60 years back, where was it? And today we are a part of the city, proper city itself. So that's the kind of impact it makes on the entire society. So when we look at petrochemical, it is good time to really invest in a petrochemical and start building capacities to bridge the gap between the import and export. And then the specialty chemicals, we need to identify the core areas where we can really contribute and really make that Niti Aayog report as a reality, move into the totally net exporter region.
Thank you, Mr. Mr. Bartan, your thoughts on this?
Yeah, same. I'll repeat crude to chemicals. We are doing a demo plant in our Vizag refinery for a single-step conversion of crude into olefins and aromatics in a different platform. There is also an alternate technology to the conventional steam naphtha cracker, which will again utilize a different technological platform to get a similar yield, which will be at much lower operating expenditure. If such things exceed, I mean, if they succeed and we can scale up, definitely India can lead in this petrochemical production, what we are talking about. So technology is definitely one. We should look at different ways, innovative ways of bringing the difference in increasing the production at the same time at the lower OPEX. Think big. Scale has to be big. If you are still going to look at small scale, you will not be able to beat the competition. So second is the scale technology, then the scale. Feedstock we have discussed enough. With this, we must be able to compete and keep growing. And the other one I already mentioned about the don't stick to simple commodity polymers, but let us do some value addition to that.
Thank you, Mr. Bartan. We talked a lot about opportunity for India. Again, one question where I would like opinion from all of you. What's the biggest execution risk you have seen or you see in scaling India's petrochemical sector? Leon, start with you.
So any major investment has execution risks, and India is no different from any other place. But I think the opportunities outweigh the risks if well planned. And you know, I know Mr. Bharathan has led a major project and quite successfully. And so I think the way to mitigate the risks, as he has mentored me, I would say, or taught me, is to make sure you leave no stone unturned to look at what could go wrong. And I think Mr. Bharathan actually invented the term, the what could go wrong approach in safety and operability reviews. And if you leave no stone unturned, you ask the right questions and the tough questions with an open mind, you mitigate the risks of these large investments that are directly linked to the implementation and execution of those projects. And the second side is around any project, the infrastructure and the policy. I think the strong partnership between government and public sector companies permits to manage those risks in a very prudent manner. So I'm very optimistic in the capability of India to manage these large projects, and that has been demonstrated by Mr. Shankar and Mr. Bharathan.
Thank you. Mr. Shankar, execution risk?
More than the execution risk, I think the timing of the decision is most important. When are we going to take this decision? That is the most valuable thing that we should come out with, because the more we delay on these kind of investments, it is only going to increase the cost of production, the cost of execution of the project. So the timing should be right. That is where I would like to give focus on. The decision should be quick. You need to take it forward with a good support from the government and also from the industry players, where you have a good tie-up of the feedstock coming in and then the product getting distributed. So you end up in a good collaboration manner with the distributors of your products, take it up as a good end-to-end solution to your project and then time it right. That is where the biggest challenge comes in. That's it.
Thank you. Mr. Bartan.
Yeah, we have two major problems. One is we don't have large contractors who can execute in a very efficient way. We have shortage of skilled labor. These two are the shortage which is actually hitting the construction. The moment the time goes more, your cost of project also goes up. These two will have to be addressed. For this, we definitely look at different stakeholders, government, our own companies, and so on and so forth. If this is done, then whatever we have been talking in the last 20-25 minutes will be made possible. These are the two things we'll have to address.
Thank you, Mr. Bhutan. My last question for the day, and maybe 1-2-liner answers. What is one decision from a refiners or policymakers point of view that we must get right in next 12 to 24 months to sustain this momentum?
Have the right long-term plan for a long-term vision and not being held back by the current state of economy, but have the long vision and act fast and with precision. Use AI as your starting point and capitalize on AI to have a digitally native approach to your future.
Thank you. Mr. Shankar.
The right thing that has to happen is see what the market requires rather than seeing your own capability. Like I said in the beginning, what the ecosystem really wants, what they want to really what they want for the growth of the region. We have to look at the products which are most beneficial for the, rather than going on a commodity zone, look at specialty areas, take the right decision, invest at the right time, and then move forward. That's the key word from my side.
Thank you. Mr. Bharatan.
So for us, immediate is to stabilize the assets, what you have built. We'll have to start producing and create value for us. That is obviously the priority number one. But notwithstanding that, we also have our own plans for the future. We'll have to at least have the blueprint ready. So the moment we are able to invest more, we will also do that at the appropriate time and taking the right decision at the right time.
Thank you. With that, I'd like to conclude this session. Thank you, my fellow panelists, for patiently answering the question, and thank you for the audience to stay for the last session of the day. Thank you.
Thank you so much.
to you the major meetings I've had and the major agreements that have been signed. And then we'll have a little time for question and answer. I will not be here tomorrow because I have to be in Delhi for PM's roundtable for the CEOs, but I'm here in the 2 days after that. So we'll have enough time for interaction. But if there's some specific queries, through Rajiv, I'll try and answer them. Well, we started yesterday with a very productive bilateral meeting with the UAE side. The UAE Minister Sultan Jaber, who's also the global CEO of ADNOC, he arrived. I think around 8:30 he landed, and we went straight as soon as he reached our meeting venue. We went into a dinner meeting, and that went on quite late. Specific areas were already in the process for further collaboration, already identified. If you recall, the President of the UAE had come to Delhi and had a long meeting with our Prime Minister, I think last week. On that occasion, if you look at the IOCL's 2 deals in the end, we are buying now something like 4.5 million metric tons per annum of natural gas from the UAE, which is fairly big.